right, guys. Let me make sure I got my mic on here. I haven't done this in a few days, so I need to remember what I'm doing. It's nice to be back. Things are going better with my nephew. I'm going to be working with him daily to try and make life a little bit better. So I will have a little less time away, or a little more time away, a little less time for this, but I'm excited today. Today's going to be a good one. We got Palantir earnings up 8% today. We'll see where it closes right at the bell in a couple of minutes. Pretty excited about that. Again, I've got the stream up. I've got the earnings report right in front of me, and then we'll have visual stocks to be able to take a look. Real quickly, we'll just assume we're near the end here. Thank you, guys. Appreciate you. We'll assume we're near the end here. So we're up about, I'd say $120,000 today, maybe 125. It's been really great in the crypto world. I mean, Cypher and CleanSpark here, you can see up 40,000 between the two just in this account. And then Mara had a great day. Mara was up 18% today. I've been saying for a week, even though I've shit on this company, I've went back and forth so many times. I'm definitely a hypocrite on this one in multiple directions. But there's a reason I bought, $50,000, $60,000 worth of Mara last week. And now today it's up, 18%. And I'm looking at, 11,000 in gains today just off of that one. So I own a lot in miners right now. I mean, if you look up here, I've got about 560,000 just between Cypher and CleanSpark, and this is just my main account. And then I've got Mara. So there's like 640,000 just in this account, and then I've got more. So I'm probably at 750, 800,000 in miners right now alone. And then I've got 278,000 in MicroStrategy. So you can tell I'm pretty Bitcoin heavy right now. I'd love to get some Hood. Hood's down 1.5%. It really got slammed because of that Wells notice, that bullshit notice. Dump PayPal yet? Nope, I haven't sold a dime. I'm still holding it. I'm going to let the 2025s either go to dust or make me money. They're only $77,000 right now for their worth. I put $348,000 into them. So it's either going to zero or I make my money back and then some. It's one or the other. Outside of that, I'd say it's about 180,000 between all my accounts and 2026 calls and a 95 strike. I still expect those to do really well. All right, so far, let's see. So yeah, Tesla had a great day too. It was only up 2% here. It looks like, we're not quite at close, but we're getting close. But again, $23,000, probably about 30 between both of my accounts, or maybe 27 between both of my accounts on the day. So another good day for Tesla. I got a feeling that thing's going to make me a bunch of money. I'm excited about it. Shitcoins. Shitcoins are doing really good. I think I'm up 20K since the last time we looked here. And you can see, I mean, I've added since these were dropping, and then I'd add and I'd add and I'd add. So I've got about, 400,000 in shitcoins right now between both of my accounts. So it's going to be interesting. Square's up. Cool, man. There's a lot of stuff that's really done well today. I don't think PayPal did well today. It's getting hurt from that 3-day rule. But you're going to see, I think you're going to see PayPal buying the dip pretty hard here too with the billions that they have sitting on the sidelines. But yeah, so risk on definitely appears to be a play right now. I do want to show you this. So let's look at our colored map here, our heat map. Apple took a hit today, down 1%. But outside of that, I mean, NVIDIA did great, and a lot of the rest of the markets. I mean, small to large. There's a lot of green on this chart. David Womi has become a member. Thank you, sir. Appreciate that. I got to figure out how to get the text over more. Maybe not just have a bunch of my heads in the jar. I don't know. We'll figure it out. All right. And again, the crypto side, if we look here, you can see how it actually took a hit on the day. But again, it had such a great weekend. Bitcoin looks phenomenal right now. We'll focus on that in a little bit. Lots of other stuff to cover. I'm going to try and get through all of it before Palantir earnings. I do have the ticker open down here, guys. So keep an eye on this. If you see this thing pop or drop, as I say it, we're going up. Let's see what's happening here. Up 2.6, up 3%. Oh, earnings are out, guys, and they don't appear to be bad. Oh, now it's crashing. Love it. I love it. Oh, earnings are so great, aren't they? All right. I guess that's what's going on. Oh, now we're back in the middle. Nope, we're still going down. Okay, this is fun. Let's see if we got the earnings. Do we have actual data? Where do I get? Let's see, news. Maybe they have it under news. No news. Financials. Quarterly results. There's a box here, and then the webcast. Let me see. How do we refresh on a Mac? Anybody tell me how to refresh on a Mac? Or if you guys see the earnings are out there, let me know. Or are we just chopping? We're just fucking chopping. This is just volatility. This is bullshit. I'm moving on. I have moved on. Let's go to another screen. All right, so yeah, anyway. Coinbase did all right. CNN Fear and Greed Index. I'm loving this. When I looking at the Fear and Greed Index, we're still at a 40. That's a great level to be at, especially with the markets doing as well as they've done the last few days. So I love that there's still fear in this indicator. That's wonderful. Trueflation has us sitting in 2.2%. That couldn't be much more different than what we're seeing from Fed data, but we'll see which one's true over time. All right, real quickly, economic data. I want to go over some of this. We got a bunch of things. Again, we're going to try and roll through all this as quick as we possibly can. So this is from my friend Seth. I post him all the time. The reason I post him all the time is he has very unique takes and then just different indicators and sectors that he pays attention to that other people don't, which I love. Let's see. Hello, everyone. Good to be a member finally. Hey, awesome, Paulos. Thank you for joining. Starbucks, how low resistance levels? Oh, it could go low. Intelligent computing, the bottom of your screen heat map seems to be cut off. Oh, is it? All right, I'll have to fuck around with that a little bit more later. Anyway, let's move on here. Oh, yeah, no, back over here. Seth Golden, so he's got a bunch of different indicators that he looks at and just different indices, and I love it because he usually has a unique perspective, usually bullish. His bias is to the bullish, I'd say, most of the time, but he does appear to turn bearish when he needs to, which I like. All right, so he said a perfect bounce off the trend line support this past week. He's showing technology and semiconductor sectors. And he says growth and tech leadership was renewed this past week, but would monitor for follow through this coming week. Now, I can tell you the follow through is pretty good. Follow through is pretty good today, guys. We'll look at a couple indices in a second here. Actually, you know what? Let's do it now. So if we look at the SPY over here, this is just so beautiful. We're right at the fib line, you can see here. Let me just move this real fast and then maybe getting closer. So we're right above the fib. We're right above the fib. And this screams that we're going back up. It's such a beautiful thing. Again, we touched on the oversold conditions on the daily RSI, and now we're up. And today the SPY closed up 1%. Beautiful. NASDAQ, let's look at this real quick. Also beautiful. Very powerful thrust up. So we're looking at being above peak volumes and the local profile, and we're pushing up towards the .618 again. This looks about as bullish as it can get. And again, this was oversold. This actually reached oversold conditions on the RSI and went just a little bit under 30. The Russell, the small caps, again, just something of beauty here. Above the first fib line and looking ready to bounce. There's nothing bearish. Guys, what the Treasury and the Fed did last week, that was game on. I called it right away. The markets didn't seem to call it right away. I don't know why. They're stupid sometimes. But there's no question. When you have the Treasury saying we're not going to issue a bunch more. Oh, by the way, Palantir up 4.3%. We'll check that in a second and see if there's actual data or if people are still just speculating. But this is looking good after a really strong close today, up 8%. Being up 12.5 is just great overall for the day. That's pretty awesome. And we'll be heavy in earnings here in a second. But yeah, so again, we're seeing beautiful stuff across the markets, across all of these indices. And what the Fed and Treasury did last week was give us the green light. The Treasury said we're not going to issue a bunch of excessive amount of bonds or Treasury papers. We're not going to do that. We're going to keep it the same. Oh, and by the way, we're starting a buyback program, like first time heaviest since 2002, 22 years, right? That seems pretty significant. At the same time, you have the Japanese stimulating their market to help strengthen the yen. And then you have our Treasury on the same day, the Fed on the same day indicates that they're going to slow their taper, which means they're not going to sell off a bunch of equities from their balance sheet. They're going to slow that down, maybe even pause it. And then again, just everything else that they were talking about, not seeing stagflation, okay with wages continuing to be a little stronger because people need it. Like everything was positive. The Fed was signaling in every way that they're fine with what's going on and that they like what they're seeing. So you just can't hate that. You can't hate that. It's not smart to hate that. Now, real quickly, before we get back to more economic stuff and just different indicators with markets, the dollar today, flat, but pretty weak for the last, month here. If you look, broke back down to the 100 moving average. With the moves that were done here recently, I would expect this to maybe even go lower in the not too distant future. So, oh, we got the guidance. Thank you, Dominic. Palantir Q1 revenue 634 million estimated, 615 million beat. Palantir Q1 adjusted EPS 8 versus 7.9 expected or estimated. And this says Palantir Q1 adjusted EBITDA 234 million versus 205. Light on guidance. Light on guidance, but you know, the ticker looks pretty good. All in all, it's up 9% on the day. This is such a crazy candle. This is like such an indecision candle. We've wicked again. I think they said that volatility had us at up to 14% in one direction or the other. We're doing pretty good here. We've been down to the 23s and up to the 26s. So we're all over the place with Palantir. So we'll check that in more detail here in a second. For Palantir, a lot of the fun is just in the call, man. Listening to, Carp is pretty badass. So he's going to be a lot of fun. But yeah, I would expect actually the dollar to weaken even more with what we've seen in the last week. That's the purpose, right? That's what their goals are, and they're going to accomplish them. And you can see this in a number of different ways, guys. If we look at the MOVE index today, again, bonds, with what they did, bonds are crashing back down here again. So it looked like it wanted to go up after this head and shoulder that it had started to break down out of. Now they're just going through the floor. And all that means is we're seeing less volatility in bonds, which is great because historically when that's happened, the stock market is doing well. And the two-year bond, the one everybody was worried about last week because it was above 5%, looks like if anything, it's probably going to break underneath the 50 moving average on the weekly. It looks weak from a technical level. It is above the 200 right now, but with the hockey stick move that the Fed and the Treasury just did to squash bond rates from going up much higher and to keep the dollar from strengthening, we're going to be good. Like this is going down. This 2 year is going to go down. Mark my words. And yeah, if you guys could hit the like, it's always appreciated. The inversion of the 2 and the 10 year is kind of tabling off here. Not too much to see there. Let's check gold. Gold, my favorite commodity to shit on. Oh, did we drop into the 20s now? Nope. Still boring as fuck. 21%. Nah. Oil. Let's move to oil. Oil, actually, again, it started to spike. This is a level where we could see a bounce because we've dropped all the way down to the oversold conditions right at it on the daily level. Not on the weekly, though. So technically, I mean, it can drop more. It could go to 75. Will that happen? I don't know. Probably deals with a lot of geopolitical bullshit. But maybe oil goes down a little bit too. We'll see. But I did want to say the yen, again, if we're looking at this, you could see where we were hitting those levels going back, to the 90s and potentially back to 1986. But since we've retracted and we're sitting good. Oh, now Palantir's going down. Now we're down 5%. Somebody figured some shit out. All right, let me take a look. We're going to look at some quick posts here and see. Do you guys have any news on Palantir? Throw it out too. But we're going to look at some quick posts here and see what we can find for the latest news on Palantir. And then we'll go ahead and pull up those financials too and take a quick look. Oh, let me do this. Got to put the dollar sign in here. Got to have a dollar sign. Thank you to the 318 people that are here. Or I'm sorry, 415. Looks like my thing hasn't updated. I'll have to refresh it maybe if it doesn't. Anyway, appreciate all you guys. Either way, whatever number. All right, so I'm just going to do this Gergevin one. Gergevin's a good news reporter. I don't know if he's a good investor, but he's good at posting news. I don't know. Kind of makes me think he can be replaced by AI, personally. All right, let's see here. So let me go back real quick. Where does this shit actually fucking post? This fucking... All right, one second. Let me go back here. Go to here. Financials. Quarterly results. This should be the right quarter. I just don't see where to click. Yeah, hey, thanks, Gartov. I'm hoping things go good with my nephew, too. I think he's definitely willing to try to make life a little bit better. Hey, if you guys see earnings out, and let me know. I'm going to see if I can... Let me see. How do you refresh a Mac? Refresh. You know what? Maybe I could just still do that over here. Let's see. I don't want to clear browsing data. How do you force a refresh on a Mac? Any of you Mac guys tell me? Force, is it, let's see, force, browser. Because I need to know this. Sorry to take a second here. Command, Control, or Command, Shift, R. Oh, okay. Let me try that. Command, Shift, R. Got to memorize this. I should get a button. Yeah, see, I can't even see it yet. If you guys know where the earnings are, let me know. The actual results. Outside of some press release that these guys have. Otherwise, I'm just going to keep going ahead. And then the call, let's see, the call is starting in 48 minutes. So we got a little bit of time here. So I think we can get past all the major stuff. I'm just going to keep rocking and rolling. Okay, so real quickly, again, economic stuff. So this was bar chart saying, interesting how both the, I love these guys actually. I talk shit about them all the time, but I do love them. Interesting how both the S&P 500 SPY and the NASDAQ closed the week just underneath their 50-day moving averages. There were a bunch of other people talking about how this meant that there's probably going to be a rejection off of this because it's like a bearish sign, but we're well above that now, so I guess not. Seth said, obey the buy signals. The NASDAQ 100 bullish % fell. See, these are the kind of things that Seth keeps track of that I don't have the patience for, which I love because, again, it lets us know kind of where we're sitting. But the NASDAQ 100 bullish % fell into oversold savvy buy zone 2 weeks ago. Now, I don't know what oversold savvy buy 2 means weeks ago, but again, this is a real index. If you look here, you can see that when it falls down into these levels, it's traditionally a bottom for these indices. So it's just another positive sign out of many, many that we should be buying the dip. Thank you to the 449 people here. If you could hit the like, greatly appreciated. Thank you very much. Oh, and Palantir down 6%, taking some gains back. Not loving that. Maybe the guidance is light. Whole bunch of things. They get paid by the government too, so there could be weirdness there. We'll see what all of it is later. Okay, so back over here. Finfluential, I like these guys. They've got good data and analytics. They said, are there any buyers of bonds out there? $TLT. Oh, thanks to Z-Code. Appreciate it, man. Thanks for the $5 tip. And I responded with no. There aren't any. And the reason I said that, if you look here, you can see the S&P returns on the left versus the U.S. 10-year returns around the end of the Fed cycle. And you can just see the strength that we're seeing in the stock market, but the weakness we're seeing in bonds. That's all that's saying. And there's a reason for that, because people don't want to buy a 20-year bond when they wonder if our government's going to be able to pay back Social Security, or pay Social Security in less than 10 years, right? Kind of big concerns. Disease Kodak. I forgot to put the message, lol. Just wanted to say we love you. Thanks, man. Thank you, Diseased. I appreciate it. Love you too, man. Nick, glad you're back, Jesse. Hope things with your nephew will end positive for you. We're going to work hard to make it happen. Marty, come on, people. Hit the likes. Yes, thank you. All right, Liz Saunders. I love this lady. She's a sweetie. She said, adjusting to match the definition of non-farm payrolls, household employment increased by 563K in April, which was the largest gain since March of 2023. Interesting statistic. I can't hate on it. I think this is good. We want to see employment surveys looking better, whether or not it's incredibly inaccurate representation. Statistically, it should be. So I like to see it, and it's just another data point to look at in the kind of way. The SPY, SPX earnings growth and margins looking good. It says S&P 500 year-over-year pro forma EPS growth, and then it shows S&P profit margins. So again, this isn't a really bad level. And this part on the right actually shows what a recession looks like for profit margins, right? So you could see profit margins here in 2007 had already collapsed a lot before we got to the depths of the 2008, where we really saw the bottom of the last major recession that this economy has seen. So the whole point here is that we should see a strong drop in profit margins before we see, like, most likely a strong drop in the indices, right? And we're not seeing that. We're actually seeing an acceleration in EPS growth. A decent amount of that, though, is the really big guys, right? The Magnificent Seven, and they will get more powerful. Something else I like to point out every once in a while, and I'm going to check something real quick. I don't know why this, I'm going to refresh my viewer count thingamajigger because it seems to be stupid. It still says 318, and that is not right. All right, so I hit the button again. There we go. It's a bigger number. I didn't just make it up and type it in. It's real. All right. I don't know why I said that, but it is real. So this says the U.S. is now producing more oil than any country has in the history of the world. I think that's a big deal. I think that's not a narrative that people talk about. I do think it's incredibly beneficial for our country that we are producing more oil than we ever have in the history of it, and certainly a shit ton more than we did in 2010. So this is good. This is wealth building. This is we know that history tells us that the more energy a country can produce and consume, the higher the GDP and the wealthier it's going to be. It's a pretty good standard to follow. And I'm loving that. And again, it's just another positive indicator in a sea of pretty decent ones. All right, real quick. I know people were talking about Jerome Powell, or I'm sorry, Warren Buffett, completely different person. They were talking about Warren. Warren had he had his like yearly conference. It was great. It was kind of sad too because he called one of the people sitting next to him, Charlie Munger, who had passed away this last year. But anyway, it's like his best friend, practically a soulmate, right? Like probably spent that more time with that guy than anybody else. And it was kind of sad, but I mean, he's still a brilliant man. But people were trying to say, oh, he's got all this cash, record amounts of cash. And so the narrative we're trying to print for some reason right now is that this means there's an imminent collapse because Warren, Buffett has this vision and can see all the collapses and know when to get cash. He's been actually accruing cash going back since 2010. And we're not at a crazy different level than we were at in 2019 before the pandemic even happened. So I want to take what Jerome Blockland said in here and reiterate this isn't a meltdown. Like he isn't doing this because of a meltdown. It's not an impending meltdown. It's just what he does. He gets ready for multi-decade changes and wants to make sure that they can buy the fucking dip. That's how he works, right? He doesn't care if the dip is in a year, 6 months, or 5. He just gathers cash for it. All right, another one from Seth. Another good one. Lots of good stuff from Seth today. It says growth over value regenerated uptrend last week. So all this is saying is that growth stocks are doing better than value stocks, and we're starting to see them in red here. We're starting to see them outproduce, and that's great, and that continued today. So we can't hate that. Real quickly, we're going to listen to something from my boy Tom Lee.
Our next guest feels investors are still too cautious.
Also, if there's any echo in this, please let me know. I know I had issues before, but I think I've fixed all of it. But if you guys see any issues with it, let me know.
But he thinks that the fear of May or the sell in May and go away will turn into buy in May. Tom Lee is managing partner, head of research at Funds.
I agree.
Strat Global Advisors, as well as a CNBC contributor. We'll never forget the call that you made, and it was one of many pretty good calls, but it was what the S&P was going to do near term based on inflation not being as bad as what was built into the market. And I think you're kind of returning to that theme. And I'd like to know why you think that. What do you know about inflation that the market doesn't seem to understand right now? You don't think we need to be as hawkish as we are?
Yes. A lot of it has to do with why CPI has remained stubbornly high. Powell talked about it, that there's this residual lag associated with housing. So even though home prices are stabilizing and rents are actually getting back to sort of traditional rates of growth, it's still reported in CPI at close to 6%. And then the second piece is auto insurance, is what Powell calls non-housing services. Auto insurance is rising at 21%. Now, a lot of that's because auto insurance rates are actually jumping, but that's not going to keep going 20% forever. Once that starts to normalize, then you can think about what median inflation is, which is running at 1.8%. So I think inflation is going to sort of cool pretty dramatically. I don't know when, but it'll be sometime in the second half of this year.
I think you...
All right, that's brilliant. I'm going to let him talk a little bit more. I might speed him up a little bit, but we're going to look at some other data points here too that talk to what he was talking about, where rents are going to be coming down and where we're going to see auto insurance come down. And we're going to see a lot of these core CPI and CPI and super core related items plummet in the quarters or months, I should say, ahead, not even quarters, by next quarter. You're going to see some major shifts there. And so this is good stuff. We want this, okay?
maybe a couple months ago, you weren't quite as bullish. I'm not sure what your reason, but you came on and said it might be tougher going. And we did have a series of inflation numbers that were hotter than people thought.
Yes.
Did we not?
We did. I mean, yes.
Yeah, and that you think that's not going to be the case as much from here?
That's right. I think going forward, a couple of things are better. One is like this job market isn't so red hot anymore. So I think the Fed's not on its heels as much about, inflation could fall. And then I think that the things I mentioned, housing and auto insurance, are going to start to cool. So inflation prints start to look better. And we know that we had a big reset in April. So I think it looks pretty good for now.
You must agree, I guess, that the Fed right now is in restrictive territory. Because I've been amazed at how the default position for Jay Powell has been for weeks and months that we need to cut eventually. He never even, it seems like the idea of hiking has never even crossed his mind, and he took it off the table again last week, basically. But it's weird to me, with the economy as strong as it was and inflation as sticky as it was, I don't know why that was his default position. I don't know why he just wasn't more asymmetric or symmetric. I don't know why he just didn't say the risks were symmetric both ways. He seems so sure. He's jonesing to cut rates. He really wants to, and the market believes him. And every time he says it, the market rallies and gets ahead of itself.
Yes. I mean, my sort of guess is I don't think the Fed's that comfortable with long-term rates at these levels. It is quite high. And as you know, it's putting a lot of pressure on regional banking. It's really hurting their balance sheet. The cost of money is quite high, especially relative to the rest of the world.
And you think we are restrictive?
Yeah, I think it's quite restrictive, yeah.
You do. And
how long have I been fucking saying that we're being too restrictive and that it's putting pressure on the government and that it's making debt unsustainable and that they're going to have to lower rates? This is what's coming, guys. This is it. He's
notice
right.
whenever we return to, okay, we're still doing cuts, and then Bitcoin goes. That's all it takes, right? The minute it looks like the printing presses are going back on, it goes. So you're still bullish. It's back to, I don't know, it was 50, I think it was at 57. It's back to 65 before you can blink.
That's right. I mean, Bitcoin's still, we think, early in an upcycle. So the idea that it could get to like 150,000 this year is still, within our base case. And
150,000 in 2024 is your base case. Okay. All right, go on. I didn't mean to,
go
on. Go on.
Yeah, go on. Don't stop.
Yeah. I think it does help that the Fed is reiterating that its view on the inflation and it's being relatively dovish is more dovish than where the market is. So I think that's the process of why markets are recovering.
Because I know when they're telling me wrapping up, how people always get mad on. You say you're going to come on Twitter and everybody gets excited, and then you're never on long enough for these people on Twitter. Should I pay attention to
Can
it?
I just one more?
Yeah, please.
And it has to do actually with what I saw when I was in Omaha this weekend with Becky. One of the things Warren did was he trims this Apple piece. And I think underneath a lot of the language that he spoke about for 5 hours.
Real quickly, Palantir's continuing to get hit. It has now retraced all gains for the day and has dropped below 20 or near $23. So it's definitely taken a hit. We'll dig into those details here in a little bit once we finish up with everything. And we'll go deep. Wow, it's down 9% now. So yeah, we'll get into that more in a bit.
There was some anxiousness about the overall economy. You don't have that anxiousness. He's in there, has this massive portfolio, sees everything. What do you think of that?
I understand where he's coming from. I think if someone said, what are they anxious about, it is the fiscal deficit, the size of the deficit.
I'm not sure he's anxious about that, though. I mean, he's anxious about that long term, but he was even asked about that, and that was not his issue. I think his issue was fundamentally, I don't want to put words in his mouth because he didn't say it. There's a lot of tea leaf reading, but just about the strength of where the market is right now and whether it's potentially overpriced.
Well, he's steering a huge ship. So, he has to think in, longer term. But to us, earnings growth is accelerating. Q1 earnings are up 7%, but, 3 groups are down 20%, energy, healthcare, materials. Those
earnings are up 7%, acceleration. These are all things you want to hear in a bull market.
Energy and healthcare flip to positive next quarter, so earnings growth hits 11%. We know there's a lot of pent-up demand. Capital spending is picking up, and the ISMs are turning up, and there's $6 trillion of cash on the sidelines, and people have been cautious for more than 2 years now. So I think the risk-reward's still pretty good. I don't know if maybe Warren's lens is more 10 years out, and that's when you can be cautious, but I think the next year looks good.
Nice. All right, that was it for that. I wanted to give you his perspective. I think he's spot on. I heard Hims crushed it. Congratulations to anybody who owns Hims. Personally, after some of the recent comments, I don't love the company anymore and probably won't cover it. But if you made money, great. Let's see. Lars Strand, glad you're back, Jesse. Your old favorite Mara's up 20%. Yeah, they had a great day, man. I made a lot of money. I think I made 12 or 13,000 off of that position today. Glad I picked some up when they were low. Lucid is trash, down 8%. Lucid is trash. Rivian is trash. BYD is trash. I should show you guys some of the videos I watch. Nobody likes the China stuff. We are going to talk about China. All right, so let's keep going. Anyway, Tom Lee done. So remember the whole stagflation thing? Everybody cares about stagflation, blah, blah, blah. So Seth posted this too. He said stagflation news stories counts skyrocketed to the highest level seen since 2022. Bloomberg recession index hitting 100%, probability 2023 when everyone... Okay, so the whole thing, I responded back with saying this thing's going to drop like a fucking rock, and I do believe that. It says, remember when Bloomberg recession index hit 100% probability in 2023? Well, that never happened, right? And we actually had a really great 2023. He said, when everyone knows a potential problem, it becomes the focal point for a solution. And yes, that is true. And I just think that stagflation is a concept that's incredibly flawed and broken. Wow, you guys with the tips today. I should leave more. This is great. Chris Carlin, $5. Hey, Jesse, can you take a look at ZS? RRC really seems solid here. Yeah, I'll take a look. I'll make sure to get to you, man. Palantir is dying. Oh, shit. It's down 10.5 now. Fuck. I was a little jealous earlier in the day of people that had bought because it was up so much, but now it's down almost 11%. So we will get caught up on that in a second. But for now, let's ignore that pain and continue on. All right. So Caleb said, as Powell just said in the FOMC press conference last week, oh, hey, thanks for the gifting a membership, Farhan. He said, and as I've been saying for the past year, this year-over-year trend in market rents is telling us where the shelter component of CPI is headed. 0. Yes, he's fucking right. I've been saying it too. You just got done listening to Tom Lee say it. When you look here, you can see it says, while we all bicker about the CPI's lagged rent data, private sector data on rents is becoming stable, predictable, and boring. So the inflation rate plummeted on rents. And I can tell you, not just anecdotally, there are houses being built, or I'm sorry, apartments that have been built, overbuilt all across this country. I can tell you the Midwest, I've been to a bunch of cities around where I live, and in different states, and there are so many fucking apartment buildings that are sitting mostly empty that have been built in the last like 3 years. So that's going to catch up and draw rents down. And again, like Tom Lee said, 20% increases in auto insurance will stop, and then they will start to go down. The CPI will plummet, both in core and super core. And so there are things happening where, like I've said before, a multitude of time, inflation is not the issue. It will very soon be disinflation. So that's why Powell clearly indicated last week to me that rates need to come down in a multitude of ways. Whoa, thanks, Andres. Thank you for gifting my 5 memberships. You guys are great, man. You guys are too good. All right, so real quick. So Seth pointed this out. I got a lot of stuff from Seth. Thank you, Seth. Still near record low home inventory. Home builders are not incentivized to build on-spec. Homeowners have mortgages well below current rates. Is stimulating home price appreciation by leaving rates too high, further tightening the housing market. The housing market is tight. Again, these rates are really fucking good. The longer we keep them there, the housing market stays tight, and you see prices go up because over 70 to 80% of the market used to be for home sales, 70 to 80% existing home sales, and none of these people are fucking selling because the rates are so low. Why would you move? You just wait. You wait until you get some indication that rates are going to come down again so that you know that that bigger house that you wanted to get is going to be cheaper, and you'll be able to maybe lowball on price or just, again, get it at the appropriate time. And so you wait it out. And as they wait it out, it makes it to where the mortgages just keep going up, and the taxes are going up, and the insurance is going up, and everything fucking goes up. And it creates inflation in this sector, and you don't want that, right? We want shelter to come down, which is why it's good that maybe they built so many fucking rental apartment buildings, because even if people can't buy a fucking house, at least they can rent for dirt cheap, because all these guys are going to have to fucking fight each other with rents. I wouldn't want to have to be like a person who's renting homes right now, because it's a weird place. The homes are going up in value. You probably want to just fucking sell them. You don't sell them because you got low rates on them. You can't rent them out for a lot, though, because you got all these apartments competing with you. It's a fucking disaster. It's such a weird world we're living in right now from a mortgage and a rent standpoint. But we're seeing disinflation come. Just remember this. Right now, we've got 30 minutes until the call for Palantir. This is going to be a good one. We will touch base with the technicals and everything and look at guidance in a second. This is from Liz Ann Saunders, another, again, somebody I love. In April, part-time employment, orange, contracted by most since April of 2020, while full-time employment, blue, increased by most since March of 2023. So now we got a flippening of what we were talking about in other data points that show that part-time jobs are going through the roof and that full-time jobs are dropping. Now, this is another good one from Caleb today. It says multiple job holders as a percent of the employed is currently at 5.2% for the second straight month. The only thing I want to show you here is, again, we know that a lot of people have multiple jobs nowadays, but as a more positive data point, it's not a crazy amount different than it's been in the last 20 plus years, right? Quarter of a century. It used to be higher. Back in the 2000s, it was higher. So I guess it's not that bad, right? That's what the data is telling us. All right, I put not a great trend at all. This is the serious delinquency rate for office loans. It said it reached 7% in April, the highest level since early 2017. I wanted to provide some context to this. This actually shows office delinquencies, retail, hotel, multifamily, industrial, and other. And here's the context I want to provide, right? Before, look at the delinquency levels for these things heading into 2008, first off. Just fucking insanely low. Crazy shit. But then you had kind of this return to normalcy, I would say, where the rates are close to what they are right now. Even in CRE, commercial real estate, people call it CRE, that's all it is. Everybody talks about how shitty the commercial real estate market is. Don't get me wrong, the increase in delinquency is concerning. But what I want to point out is that the current level isn't even the peak of what it was in 2012 and 13. It was higher then, closer to 10%. We're only at 7 right now. And again, if you look at these other retail, hotel, multifamily, industrial, and other, they're not at crazy high levels either. They're still in the 2010 to 14 range. So these aren't just outrageously abnormal levels. And I just want to put that out there because I think there's this narrative that even CRE is just totally fucked. And maybe it will be in the future. This is a steep incline, but we're just not to those levels yet. And maybe CRE is sustainable at a fucked up level. Maybe it is. It just all depends on what we do with rates and whether or not we can help out some of CRE and some of residential and existing homeowners. So anyway, that's what I had for the U.S. economy stuff. Let's get the fuck off of this. Let's jump. We need to get through all the rest of this as quick as we can so we can get back to Palantir. Economic calendar, nothing today. Tomorrow, lots more stuff. So we'll focus on that tomorrow. Today, July. We're sitting at about 32%, 33% almost, 32.4% to be specific, at a rate cut in July. So that's a pretty good level still. Maybe drop just a hair, a percent or something from last week. All right, real quickly, I'm going to jump into, I think, yeah, let's do stocks. So we'll do, or you know what, I want to do Bitcoin first. We're going to do Bitcoin, then we'll roll through the rest of this real quick, and then I'll look at comments. I know I'm behind on them. So Bitcoin, again, very nice pump on the weekly candle, guys. This is so good. I've said this a bunch of times, but we have these massive wicks where this thing just doesn't want to stay down. This the week before last was the only one that really pushed us underneath, and we said a big fuck you to that and climbed like crazy. So this is a nice looking chart. This is a very bullish looking chart. And I would expect more upside in Bitcoin as the weeks go. Because again, the Treasury and Fed and the Japanese yen and just everything else that's going on is screaming upside. Even though liquidity could maybe be a little bit better, I see it gaining, especially in China. They're desperate. All right, MicroStrategy. Today, upside. 3.74, up 0.88 or 0.88. Yeah, that's what I said the first time in after hours. This is good. We're above peak volumes. Here on the local time frame and really for a while. So that's a good level. It retracted a little bit, but we've got this back and forth where we're going to have major swings just because of the fact that these guys are running with a premium. Mara, the elephant in the room today. This bitch flew. So I guess it closed up 18% on the day. But again, the 200, like I was saying before, was a good support zone here. And we're above peak volumes. And this thing could really run. Today, I think it was S&P 600 something inclusion, yada, yada. Good stuff. CleanSpark. also doing well today, up 8%, down 0.46% in the after hours. But if we get above this fib again, we haven't done a good job finding support on the fib. It looks like we could actually be getting above this fib. And if we can close it, start closing this on the daily, and maybe just even grinding in this level, I would be happy. But the fact that we're getting closer to it again, if we get above it again, I mean, it's like 1, 2, 3, 4. We're going to say fifth time's the charm. Cypher, I love this one. It's up 8%. It's grinded out such a beautiful bottom here, guys. It's stupid, ridiculously nice. Like, look at this, the upward move in the RSI. And then just, again, we haven't been able to get below this fib recently. We're above all the key volume. This thing only is a $1.33 billion market cap, so it's got room to run. This thing could easily do 112%. If Bitcoin goes to where I think it can go at the 92,000, 93,000 range, the next fib level, basically, then we'll be looking at, 100+% on this. 2x at least, maybe drifting into 3 over the short term. So very good stuff. All right, let's get out of this. Let's go to Tesla. Oh, and real quickly, before I finish that, I just want to talk through some Bitcoin-related stuff, too. Just super fast. This one will be quicker than the economy. Real quick, right here. I want you to listen to President Bukele from El Salvador talking about Bitcoin.
The federal.
It's such a it's all true, right? It's true what our government does to us and what governments around the world do, and it's important that this country recognizes this. And their country is so much safer and so much wealthier already from adopting Bitcoin a few years ago. And imagine peak bull cycle. So listen to what he has to say. That's all I'm saying.
Reserve is nothing federal and has no reserves, right? So, they do print more money and they rob you from your wealth and from your savings, and that's immoral. But it's not only immoral, but it also destroys some basic economic principles, like, for example, saving or your pension. From this financial publications, they will print lies. But there's something special about lies, is that they don't last for long. They don't last long. The Federal Reserve.
He's 100% right on everything about lies, about how the Fed is stealing our wealth. And the worst part about government is, like, socialism sounds great on paper. It really does. It's like, oh, hey, you know what? We should get everybody an opportunity. Everybody should have a house. Everything should work good. It's like, oh, yeah, all that's great. That's really wonderful. And we should aspire to all these things. And with technology, we might be able to give people a lot more opportunity than they ever would have had before. We live in a great age, right? But outside of that, government is shit at managing everything. Going back to the times of the fucking Romans and beyond, right? As far back as we know, societies just destroy themselves. And it's usually because of some leaders that are dipshits and don't know what they're doing. And I'm sorry, but, like, politically, I don't care what side of the aisle you're talking about, they're both fucking morons. And they're spending all of our money, mortgaging our kids' futures, and they don't even give a shit about balancing a budget anymore. So none of them fucking care about it. And they just print money. And then you have that video. Oh my God. I'll show the video tomorrow for the people that haven't seen it. But when you have one of the head economic advisor to Biden, who doesn't even know how the fucking money printer works or how the bond market functions, that's really frightening. Okay? It's really scary when they think they can print whatever they want because of modern monetary theory, MMT, which is bullshit. And they don't even know how any of this works. And they're like the head economic advisor for the fucking president of the United States. It's shocking. So I'll dig that video up and we can watch it tomorrow because it's some bullshit, man. It's really frightening. It's the dumbest shit I've ever seen in my life. And it's our government. So fuck the government and fuck them stealing money from us. Soon, what we need to do is we need to turn it into a fucking portal that is managed by AI, and the AI doesn't have political agenda, and all they do is perform basic functions that we fucking vote on. And it's very clear, and it's organized, and it's structured, and the government goes to dust, most of it, because it could be like 10% of what it is today. Anyway, rant over for now. I put here, so this said, bar chart again, love these guys. It says crypto funds see the largest weekly outflow in almost 2 years. So I do this to them all the time. And then I put, and then the largest inflows right afterwards. Because it's funny that they put this, 18 hours ago, and then we've seen Bitcoin just go straight fucking up. Now, I wanted to mention this too. Thomas from Apollo. I love that site, by the way. But he's great. He said, GBTC outflows, just it flipped to inflows. M2 money supply turned positive. Again, think about Fed rate cuts are still coming. Think about what the Fed did, what the Treasury did, all the things I've already said. And the halving supply crunch hasn't fully kicked in yet. We are so ready to rock it. I hope you're all ready to rock it because it's coming really soon, okay? So it's very important that you understand this. And again, I talked about this with Mara. So S&P, SC, small cap 600, I don't know, whatever. It got added to some indice with the S&P, and so everybody's happy, right, for Mara? Great. Beautiful. That thing can still run. They got a huge stack. I've said that for at least 2 weeks. Well, I've said that for a long time, but I think it's going to help them a lot because they were super oversold. They were down like 60% from recent highs, so they're going to bounce. Anyway, Thomas also said $725 billion Bernstein predicts BTC ETF flows will pick back up as ETF becomes more integrated with private banking platforms, wealth advisors, and brokerage platforms. So again, Bernstein saying that. Who else is saying that? BlackRock and like every other major investment firm. So probably going to happen. I don't think they're lying to you. Willy Woo is a genius and also looks like a super stoner Asian dude. He's so great. And he probably does a lot of drugs. I don't know. But he's brilliant. And he said, seems like a good setup for BTC to reach escape velocity. Bull div with lots of room to run. And this is the Bitcoin VWAP oscillator. And again, or VWAP, whatever. All this is saying is this is, again, a divergent signal, right? Like an RSI, MACD, all that kind of stuff. And it's just another one that shows that the oscillation is getting ready to go to the upside. And we want that. That's it for Bitcoin. Moving on. Now we're into Tesla. All right, we still got 18 minutes. I can crush stuff, and then we can get into Palantir, I promise you. All right. Tesla up 2% on the day. Again, made a bunch of money off of it. It looks like it's starting to oscillate to the upside. I could see some grind maybe through here, but I do expect us to go higher in the near future. I think that that's very likely. Also, I wanted to point out a few other things that pertain to Tesla. If you haven't seen this video yet, you should watch it, just showing the Tesla bot and what it can do, and all the moving around and sorting batteries, and that they've got, like, again, just rooms of these things working and testing, and you can see them all over the back of this. There's just a bunch of different robots that are learning these things. You remember how you had training? Did you ever have a job like in a warehouse or anywhere, like first job? Maybe it wasn't, it was very monotonous. It wasn't like a great, I don't know, I did. And you did stupid shit like this. You had to learn how to do your job, right? These robots are learning how to replace our jobs. And they're going to do it way quicker than you expect. So Tesla's the leading company. All the other robotic companies, you know who they say their number one competitor is? Sound was bad? It's probably because I was fast forwarding like fucking crazy. Let me know if my mic's bad, though. But again, this is the leading company. Every other robotic company says that this is their competition. Remember this. All right, this post, it says, isn't it ironic? Oh, wait, I already did that one. Got to go up. This one I wanted to show is just amazing. This thing auto parks, and I don't know, maybe I did this the other day, but this thing auto parked over here, moves around this semi and then backs into its parking space. It's just beautiful. Also, my buddy Haley, love her voice, love her accent. She's a sweetie, great stuff. All she said in here is that, she said, you might not be surprised if you're bullish on Tesla to find out that Tesla is the third most undervalued stock in the whole of the S&P based on fair value using the average of 3 valuation models. All right? And she's got the details in here. You can use your coupon code if you want. But again, this is just another representation of the fact that Tesla is cheap right now and that you should own this fucking stock, which is why I'm showing it to you. Also, Tom Zhu, he was helping out in the United States for a while. He's been shipped his ass back to China so that probably, speculating, he really helps push things forward with FSD there. And again, just what's going on within their market. Palantir, I don't know if you guys can see this, but we're on this trend line again. We've kind of bounced back up. That could be good as far as finding a base level of support. So down 6.82%, getting a little bounce. Can't hate it. All right, so that's what I had for Tesla. Real quickly, going to jump through a couple of other symbols, and then we're going to spend about 10 minutes before the conference call talking about Palantir and just looking at some stuff. All right, Hood up or down 0.95%. Again, there was that bullshit that came out today about the Wells notice from the SEC. It's all bullshit. Deals with their crypto division. These guys have been so light on adding cryptos. If anything, I think they should be adding more. But I do worry they probably won't do that because of this Wells notice. But we're bouncing in after hours. Good stuff. SoFi showing some strength today. Up 2.87%, only down 0.14 in after hours, but above the fib level. We like to see that. I'd love to see it get above peak volumes in the 7s again. Really need to get above the .618 at 798. I think it's coming. Square had a nice bounce, up 5.84%. Again, that earnings call we saw last week, guys, if you participated in that, I am so impressed with these guys right now and what they're doing with Bitcoin and how they're furthering it. I love the fact that Coinbase, too, has the Lightning Network now for being able to move stuff. And I love that these guys are doing stuff with miners. They're doing stuff with cold storage. And they're also making it to where people can auto buy. And they're buying themselves for their treasury. And so, like, there's just so much. I want more stock in this. If one of these others that I have a bunch of asymmetric bets in really fucking takes off and I feel like it's time to take a little bit of cash off, I'll probably buy some stock in Square because I want to support them and I want to support Jack Dorsey's vision on Bitcoin. It's great. Palantir. I think I skipped PayPal. I'll get back to that. Oh, well, I mean, we're doing fucking Palantir. Move on. ARKG. ARKG up 2% on the day. Not a bad day. Flux. What the Flux? These are all mine, and I'll get to yours guys after this conference call. 0.81%. Pretty good for Flux. Not the worst. I have another one, DLO. It's like a Latin American wannabe Mercado Libre. Gonna pull that up. Let's see how they did it today. Down 1.4%. Not super great. Still kind of above peak volumes here. Needs to find support on it. Hope they do it. Did I do PayPal? Let me just go back here. PayPal. PayPal sucked. Down 0.14%. Maybe getting a little bouncy. But a little bit disappointed in the price action with PayPal. But again, I think that's getting ready to change. Like literally after tomorrow at the latest. Because we're gonna have it to where these guys can start doing buybacks. And we're just gonna have the 3-day rule that'll be passed here after tomorrow. And so I think even by tomorrow, I think you're going to start seeing more buying in this. They had a great quarter. This is bullshit. All right. Let's get to Palantir. We're in the Palantir realm now, guys. Let's see if I can actually... Finally, the presentation. This is what I want. All right. Let's look here. Let's go through our presentation. And I'm probably going to temporarily, since the price action started to stabilize a little bit, we're going to make this screen a little bigger. Here, let me do my half and half. And that's not coffee. It's this. Nope, that doesn't help, right? I want it to be bigger. That's not really bigger. I got to fix that. All right, back to the default view. We're sticking with this one. This is all we got. Let me see. Can I do this? Let me see. Will that do it? Will that? That's maybe a little better. Kind of chops it off. All right, highlights. Let's read through here. U.S. commercial revenue grew 40% year over year and 14% quarter over quarter to $150 million. Let me see real quickly if we're updated on here too. We can walk through the visuals better and then just look for key highlights. Alejandra's already got her up. Love it. Looks fucking great. Revenue growth year over year, 21%. If we look here, customer count, commercial, government, let's just pull this up. Seeing decent growth, not huge growth in government. It's really been commercial lately. So that's good. Revenue for top 20 clients hasn't grown that much. I actually like that because it means we're diversifying with smaller clients. Another quarter of positive net income. Let's quickly jump, though. I want to look at forecast because I think people said guidance was low. That doesn't look bad to me. This doesn't look bad at all. I think, you know what? I think people just got too hyped up or something. I mean, look at this. Q4, they're guiding for $736 million in revenue, and we just did $634. So these growth levels haven't slowed down a lot. Maybe people just thought they were going to speed up a lot. I don't know. Let's look at insider activity. Hasn't been a lot of selling, just small amounts. Short interest is going down. I don't know if institutional ownership is right. So nothing crazy there. Billings were kind of flat. revenue segments. Let's just look here. So I like the growth. And what do we have? 284 last quarter, 299. So we're seeing continued growth in commercial, which I want to see, and government, but I want to see commercial grow quicker. These guys have 3.85, almost 3.9 billion in cash and bonds, and only 163 in debt. What's the PE on this? So the forward PE is 75. This is kind of the problem. And I say this with other stocks too. And I got to say it with Palantir, right? It's expensive, guys. It's an expensive stock. I don't think the price action we're seeing today on this left corner is crazy, right? And here's the thing. Oh, we're down 6.66% as I'm talking. I mean, that's a little scary. Oh, it just got a little different. That's better. But again, so maybe we see a ramp in the future that makes it more justified, but this thing will work into its valuation. It's just really fucking high right now. 75 is not a low forward PE. 205 is not a low PE ratio. And I like to use these to value companies. People use price to flow and sales and all these other ratios too. And yes, there's merit in those, but I think it's very easy to look at forward PE and be like, you know what? This is a great company, but 75 is rich. Just like it was fucking crazy for Tesla to be in that at 420 or whatever its forward PE is. And right now for Tesla, what are we at? I mean, it's still potentially kind of richly valued unless you believe their margins are going to explode soon at 72. So you can make the argument with both of these that they're rich based upon these valuations. But the question is, are they going to explode in the future? And then all of a sudden growth just continues to become exponential. I can really see that in Tesla's future because I can see FSD and I can see how they're really starting to sell FSD to make it to where they can get margins, right? Like $99 a month is way more affordable. It actually makes a decent amount of sense for some people. $200 doesn't. Not trying to be negative, but PayPal really getting ready for, I'm not sure what you mean by that, but PayPal is one where they're doing all the right stuff and it's super fucking cheaply valued. Isn't it positive to see forward PE lower than current? Yes, you don't want to, if forward was 205, you'd really be fucked. But you need to look at the valuations of other companies in the sector too. People make the argument all the time. Yeah, it's growing. It's definitely growing. And depending upon the metrics that you're looking at, Palantir is growing. But again, revenue growth year over year was 21%. Not quite the same. Profit growth looks great, 426%. That's a beautiful number. But one can make the argument, like they could make right now justifiably for Tesla, that it's currently overvalued. But once their margins start to increase exponentially here, like I think they're going to start to do in the next couple of quarters, that valuation could quickly work its way into it. And if anything, people will start to scream that it's undervalued. Kind of like they were doing with NVIDIA too, right? Like NVIDIA is fucking highly valued, but the growth has been remarkable. Palantir could do that too. But again, it's just not cheap. It's not a deal right now. And they need to continue to have strong growth. They desperately need it, right? And let's see what other charts we have here. Average revenue per customer going down, but that's in a good way. Net interest income looks great. Again, they're doing all the right stuff here. This company's doing the right stuff. Stock as a percentage of revenue is still 20%. That's kind of high. But I mean, the company looks good otherwise. It's just a matter of, can they grow as quick as they need to? And let's go back over here to the presentation real quick because we only have 5 minutes until the call starts. And we want to make sure that we get on that. So we've looked at the visuals. We got to be there. Let's just glance through. Closed 87 deals for over 1 million. Revenue growth, 21% year over year. Quarter over quarter, 4% to 634 million. All these are good things. U.S. commercial customer count grew 69% year over year. So that could be a good sign of things to come, right? These guys, they basically do a lot of like temporary demos. We'll spin you up. We'll give you guys an environment to work in. We'll let you basically create efficiency within your company to where you need us. And then we'll talk about billing, right? So the commercial customer growth of 69% year over year could be a sign that next quarter or the one after that could be really strong. So that's a good sign. And 19% quarter over quarter is pretty good too. These are good growth rates. It says adjusted operating income, but they might not turn into revenue right away is what I'm trying to say. Hopefully that comes across. Adjusted operating income of $226 million, 36% margin, and 6 consecutive quarter of expanding adjusted operating margins. That's all great. Did I look at cash flow? How are we doing? Cash flow is good. Okay. All right, good. Let me go back here. Unchecked anti-Semitism in the U.S. All right, I'm gonna stay out of the politics stuff on here. I mean, I agree with them, but I'm gonna stay out of politics. All right, Palantir builds products to meet the moment. Let AI remake the whole U.S. government. Oh, and save the country. We definitely need less U.S. government and more, and we need more intelligence in politics, especially unbiased intelligence. Yeah, we could use help. I think that's an agreement with all sides. In Q1, the U.S. Army awarded Palantir over $178 million. This is a really cool contract for the Titan here to deliver the next generation Titan deep sensing capability vehicle. This is good stuff, guys. It's great for Palantir and it's great for our country. Palantir and the VA. How data-driven acquisition identified $90 million in savings in the Department of Veterans Affairs in 6 months. I mean, I think they can do better. VA is so fucked up, but I love that. I mean, again, we're heading in the right direction. I got no complaints. And I love that Palantir is embedding themselves in multiple areas of the government. Again, they need as much help as they can get. And the deeper they get ingrained with that, the more they're going to be able to get these contracts, especially if they actually give a fucking shit about preserving our country from a defensive standpoint and a fiscal one. And it seems like they care about both of those things, which is why I love Alex Karp, okay? So this is all great. Palantir and Oracle, partnering to provide secure cloud and AI solutions that power business and governments around the world. It says read more. We'll probably let them explain it in the call in a couple of minutes. AI boot camps, deploying full spectrum. And again, this is where they bring the customers in. It's one of the greatest things I think they could have done. I used to work for software companies. And if you have a good product, the best way to show people that you have a good product is to literally have them use it. Give them as much assistance as you can. And if they find value in it, they will pay you. If you can save a company fucking money, if you can make it to where they have less staff, if you can make it to where they're creating efficiency and increasing productivity, which is what our fucking country needs right now, right? We need AI, we need autonomy, we need robotics, we need to increase efficiency across every aspect of our government and business and our just personal lives, right? It enriches us. So we want this kind of stuff, and it's great that they put it out there and let people see it, because that's how you know you have a good company. When they're like, we don't give a fuck about your money, we want to show you how we can benefit you, then we'll talk money. I love that. This is one of the things I love about Palantir, and it's one of the things that people used to shit on this company about, and it's bullshit. It's their biggest strength, because real companies will give you the shit for free and then charge you later. All right. Since launching AIP in mid-2023, we've completed AIP boot camps with 915 organizations plus in the United States and around the world. And they've got General Mills and Lowe's talking about examples here. General Mills says we're saving about $14 million annually, and it's only deployed to part of our network. Part. So it pays for itself, right? And then Lowe's said in less than 4 months, we created something from a proof of concept, POC, all the way to production. Palantir has made us faster and smarter. These are real fucking businesses that are telling you this company is great. Lennar, you all have changed the perception of technology delivery. This is absolutely game changing. Fred Rothman, CEO of Lennar. This is a real company, and they're doing great things. And so ignore the fucking price action. And not only did we find support on the previous resistance level, which is great, but now it's only down 4.88%. So maybe I'll get to buy some of this if my asymmetric bets ever fucking take off. That'd be cool. All right, financials. We're going to skip all this shit. We're literally going to be covering this. I'm jumping back over. Let me see if they're up. I'm going to unmute here for a second. One sec. I'm just going to refresh.
Including statements regarding our second quarter and fiscal 2024 results, management's expectations for our future financial and operational and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which would cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We started the year exceedingly strong, with revenue of $634 million, an increase of 21% year over year, driven by the momentum of AIP and our continued strong performance in U.S. commercial. Our results also highlight the growing strength of our U.S. government business and our enduring mission-critical work. The continued interest in AIP is loud and clear in the conversations I'm having across our customer base. We've shared our plans to capture the market with AIP, and our results show that our strategy is not only succeeding, it is accelerating. While still early days, our focus is on building the foundations of a long-term business. We intend to relentlessly continue landing new customers and subsequently expanding those engagements as our products gain traction and have meaningful impact within enterprises. Not only are we increasing the volume of new customers, but I'm pleased with our ability to grow these new customers as well. With regards to landing new customers, we've sustained our high volume of boot camps with over 915 organizations participating to date to meet inbound demand. We are also seeing substantial deal cycle compression. As one example, a leading utility company signed a 7-figure deal just 5 days after completing a boot camp. Another customer immediately signed a paid engagement after just 1 day of their multi-day boot camp, and then converted to a 7-figure deal 3 weeks later. We expect the favorable unit economics and higher throughput to continue to accelerate our business. U.S. commercial. While Q1 is seasonally our slowest quarter, AIP adoption by new and existing customers helped drive notable growth in customer acquisition and revenue in our U.S. commercial business. In Q1, we added 41 net new customers in U.S. commercial. Our customer count increased 69% year over year and 19% quarter over quarter, compared to 8% quarter over quarter growth in Q1 2023. Excluding strategic investments, our U.S. commercial revenue soared by 68% year over year and 22% quarter over quarter. New customers span a variety of industries, as AIP's applications seem endless. From the largest independent bottling company in the U.S. to a leading energy and infrastructure company and a multinational airline. In Q1, our U.S. commercial business had customers from 56 of the 74 GICS industries. As we're landing new customers, we're also seeing those customers expanding their work with us. Across my conversations with customers, I'm seeing the recurring theme of them asking me how they can do more, faster with enterprise transformations driven by AIP. We're showing them how they can move their AI strategy beyond chat. Existing customers such as Lowe's, Cleveland Clinic, and General Mills, among others, are realizing the extensive possibilities of AIP within their own enterprises and increasing their scope accordingly. Lowe's accelerated its engagement from a starting point of no AI to utilizing production-level AI for over 1,000 customer service agents, resulting in a 75% reduction in overdue tasks. As one of its directors noted, quote, "We achieved this in just 4 months and onboarded 1,000 users within 3 weeks of rollout." Cleveland Clinic committed to a 10-year expansion deal to deploy more broadly across its hospitals. General Mills expanded the scope of its work further last quarter as its senior director noted, quote, "We're saving on average about $14 million annually, and it's really only deployed to part of our network as we speak." We're seeing rapid expansions within key customer accounts. For example, a Fortune 500 industrials company signed a 3-year expansion deal, which increased the annual revenue run rate of our work with them nearly 5-fold compared to our initial engagement with them in 2022. A Fortune 100 retail company started a pilot in Q2 2023, expanded to a use case conversion in August, then expanded its work to a $12 million ACV enterprise engagement last quarter. These are just a few examples. More and more customers are expanding their work with us due to AIP and the incredible traction our software has within their organizations. Turning to our US government business, our revenue continued to accelerate last quarter, increasing 8% quarter over quarter versus 3% quarter over quarter in Q4, with our products every day having critical impact on current world events. We see continued demand for Mission Manager and positive reception to First Breakfast. Last quarter, we were honored the U.S. Army awarded Palantir over $178 million to be the sole prime contractor to build a next-generation targeting node under the Titan program. This marks the first time that a software company has won a prime contract for a hardware system and exemplifies Palantir's position as the software prime, opening the door to vast new opportunities. It is with immense reverence that we approach building and maturing our revolutionary capabilities for our warfighters. In our international government business, we are continuing to ramp up the critical work for delivery of the UK NHS Federated Data Platform, as well as providing defense capabilities to allied partners around the world. Looking at our business and its impact broadly, I'm invigorated about the year ahead. We have never had more conviction about AIP and the power of our software, as well as our continued efforts supporting the most critical missions around the globe. I'll now turn it over to Sham.
Thanks, Ryan. The clear signal from AIP bootcamps is that AI is for builders. So many anecdotes and quotes from customers, all reinforcing the same point. They are getting more done in a day or two in AIP than in a quarter or two without. We have pioneered the approach to getting beyond chat and unlocking the value of LLMs in the enterprise, taking inherently unstructured inputs that are flying around the enterprise, be it emails, Slacks, PDFs, images, comments, audio, and turning them into structured actions and outputs.
Oh, God, I keep having a delay here. Sorry, guys. I just wanted to say this stock might actually be positive here soon, which is insane. And wait till Alex gets on. Alex is crazy as shit in a great way. I actually think we might end up closing positive on the day, but we're only down 2.06% right now, which is crazy good.
Taking an email from a customer requesting a different product mix and turning it into an actual inventory allocation in the ERP system of record. Taking a health claims denial and programmatically generating the documentation and supporting evidence from the clinical records and contracts. Automating P&C insurance claims processing, and even in government, using vision models to narrow candidate products driving foodborne outbreaks at CDC. And we have started rolling out Build with AIP, a series of developer and builder-oriented tutorials and reference implementations that enable builders to ramp quickly on the primitives and power of AIP and practical examples that unlock every employee at every customer. Our growth is being driven by the incredible dynamism of the U.S. commercial market, and we believe the U.S. government will follow. With this momentum, we have launched builder bootcamps in the U.S. government. The U.S. Army recently issued a memo identifying 2 Palantir systems, AIDP and Army Vantage, as amongst the 5 total platforms approved for builders. The U.S. Army's Artificial Intelligence Integration Center, AI2C, at Carnegie Mellon, leverages these platforms for half of their active projects and recently built an application for the 18th Airborne Corps with OSDK. Our DoD customer recently hosted a hackathon showing the value of the open Joint All-Domain Command and Control, or JADC2, SDK that we have been pioneering. One participant commented, "Nominating targets with Gaia Assist turns a 6-hour workflow into 10 seconds." We continue to invest in Mission Manager and will be extending it to the edge with our Edge X infrastructure in U.S. government. Now customers can use their cloud instance as an integrated development environment for edge platforms, centrally build, test, and continuously deploy and manage multi-vendor Big Tent edge ecosystems. It covers everything from streaming pipelines, OSDK-backed applications, native Gotham applications, and third-party apps. We are excited with our team of rockstar partners to deliver on the U.S. Army's Titan program. This marks the first time a software company has won a hardware contract, firmly establishing the role of the software prime. We believe the core of this software, Target Workbench, will be critical in every cockpit, every vehicle, and every ship. Finally, I'd like to acknowledge the eye-watering work of our service members and our allies in meeting the moment defending against the massive Iranian attack on Israel. The Gotham investments in JADC2 performed excellently, and we're building even more, even faster. I'll turn it over to Dave to take us through the numbers.
Wow.
Thanks, Sean. Q1 was a strong start to the year. Revenue growth accelerated to 21% year over year in the first quarter, driven by momentum in AIP and our U.S. commercial business, and a re-acceleration in our U.S. government business. We delivered our sixth consecutive quarter of GAAP profitability, generating a record $106 million of GAAP net income in the first quarter. We also delivered our fifth consecutive quarter of GAAP operating profit, generating a record $81 million of GAAP operating income in the quarter. Adjusted operating margin expanded to 36% in the first quarter, continuing to highlight the strong unit economics of our business. The revenue and profitability outperformance drove a 3-point sequential increase to our Rule of 40 score from 54 in the fourth quarter of 2023 to 57 in the first quarter of 2024. This was the third consecutive quarter of an expanding Rule of 40 score. Turning to our global top-line results. We generated $634 million in revenue in the first quarter, up 21% year over year and 4% sequentially, exceeding the high end of our prior guidance. Excluding the impact of revenue from strategic commercial contracts, first quarter revenue grew 24% year over year and 4% sequentially. Customer count grew 42% year over year and 11% sequentially to 554 customers. Revenue from our largest customers continues to expand. First quarter trailing 12-month revenue from our top 20 customers increased 9% year over year to $55 million per customer.
Real quickly, super short rant, I promise. I've just got to say the customer account growth, commercial customer account growth, customer account growth, growth in the government. I don't think people can appreciate this and how crazy this could get. They've got all these customers that are onboarding. Some of them are starting to figure out that they can make a bunch or save a bunch of money. As they save money, they have a greater interest in committing more in revenue and onboarding more, larger parts of their company. And the success they reap from, having maybe a positive net income, having more cash that the company gets, then they end up hiring more, and then they get more people on this platform. The growth could just grow and grow and grow, and if anything, start to speed up for a period of time. So, again, the PE's high at like 75, but this is very exciting. It's a very exciting company, and it's going to be interesting to see what they can do in the quarters ahead and throughout the rest of this year.
Now moving to our commercial segment. First quarter commercial revenue grew 27% year over year and 5% sequentially to $299 million. Excluding the impact from strategic commercial contracts, first quarter commercial revenue grew 36% year over year and 4% sequentially. We had a very strong quarter of commercial bookings. First quarter commercial TCV booked was $505 million, representing 187% growth year over year. Our U.S. commercial business continues to see unprecedented demand driven by momentum from AIP. First quarter U.S. commercial revenue grew 40% year over year and 14% sequentially to $150 million, surpassing international commercial revenue for the first time. Excluding revenue from strategic commercial contracts, first quarter U.S. commercial revenue grew 68% year over year and 22% sequentially. AIP is driving both new customer conversions and existing customer expansions in the U.S. In the first quarter, we booked $286 million of U.S. commercial TCV, representing 131% growth year over year. Total remaining deal value in our U.S. commercial business grew 74% year over year and 14% sequentially. Our U.S. commercial customer count grew to 262 customers, reflecting 69% growth year over year and 19% growth sequentially. We generated $149 million in international commercial revenue in the first quarter, representing 16% growth year over year, but a 3% sequential decline as a result of continued headwinds in Europe and the revenue catch-up in Q4 that we noted last quarter. We continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. Revenue from strategic commercial contracts was $24 million in the quarter. We anticipate second quarter 2024 revenue from these customers to decline to between $7 to $9 million compared to $19 million in the second quarter of 2023. We continue to anticipate 2024 revenue from these customers to be approximately 2% of full year revenue. Shifting to our government segment. First quarter government revenue grew 16% year over year and 3% sequentially to $335 million. First quarter U.S. government revenue grew 12% year over year and 8% sequentially to $257 million. As Ryan noted, we're excited to be the sole prime contractor under the Titan program and will continue pursuing other defense opportunities. We believe we're well positioned to see growth in our U.S. government business over the course of 2024. First quarter international government revenue grew 33% year over year and declined 9% sequentially to $79 million as a result of the revenue catch-up in Q4 that we noted last quarter and continued headwinds in Europe. First quarter TCV booked was $904 million, up 128% year over year. Net dollar retention was 111%, an increase of 300 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q1 of last year. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. commercial business over the past year. We ended the first quarter with $4.1 billion in total remaining deal value, an increase of 22% year over year and 6% sequentially, and $1.3 billion in remaining performance obligations, an increase of 39% year over year and 5% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense, adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $226 million, representing an adjusted operating margin of 36% and marking the sixth consecutive quarter of expanding adjusted operating margins. Q1 adjusted expense was $408 million, up 2% sequentially and 2% year over year. Turning to the balance of the year, given our conviction in the U.S. business, coupled with our margin expansion, we intend to boost investment in resources in the U.S., including in AIP and specific defense opportunities. While we expect expenses to ramp starting in Q2 through the back half of the year, we remain focused on calibrating expense growth below revenue growth for the full year in order to continue delivering on our goals of sustained GAAP profitability and GAAP operating income. In the first quarter, we generated GAAP operating income of $81 million, representing a 13% margin, our fifth consecutive quarter of GAAP operating income, and fourth consecutive quarter of expanding GAAP operating margins. We generated first quarter GAAP net income of $106 million.
I wonder if they're going to do the live feed at any point, or have they stopped doing that? I kind of miss it.
Representing a 17%
Got to have Carp on the live feed. I mean, you got to.
Margin, our sixth consecutive quarter of GAAP profitability. First quarter adjusted earnings per share was 8 cents, and GAAP earnings per share was 4 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 57% in the first quarter, a 3-point increase to our Rule of 40 score from the prior quarter. We will continue to strive to maintain this exceptional balance of top and bottom line performance. Turning to our cash flow. In the first quarter, we generated $130 million in cash from operations and $149 million in adjusted free cash flow, representing a margin of 20 and 23% respectively. In Q1, we also repurchased approximately 500,000 shares as part of our share repurchase program. As of the end of the quarter, we have approximately $990 million remaining of the original authorization. We ended the quarter with $3.9 billion in cash, cash equivalents, and short-term U.S. Treasury securities. We retain access to additional liquidity of up to $500 million through our revolving credit facility, which remains entirely undrawn. Now turning to our outlook. For Q2 2024, we expect revenue of between $649 and $653 million, and adjusted income from operations of between $209 and $213 million. For full year 2024, we are raising our revenue guidance to between $2.677 and $2.689 billion. We are raising our U.S. commercial revenue guidance to an excess of $661 million, representing a growth rate of at least 45%. We are raising our adjusted income from operations guidance to between $868 and $880 million. We continue to expect adjusted free cash flow of between $800 million and $1 billion, and we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Yes. Yeah, there we go. My man.
Welcome to our Q1 earnings. I think it is fair to say we crushed Q1 in the U.S. We are on fire. You see this in our Rule of 40 being 57. You see it in the 68% growth in U.S. commercial. If you do apples to apples, following on 70% growth last quarter, or 71% if you do apples to apples, taking out SPAC revenue. You see it in the deal growth in the U.S., growing from 70 to 136 in a year. You see it in the general enthusiasm around our products, especially in commercial, but also in government, which has begun to reaccelerate. You see it in general in our customer growth in U.S. Comm, which grew 69%. And again, we are growing these numbers while maintaining a Rule of 40 score of 57, which basically means we're doing the impossible. We are growing the company while investing in our core IP or our software development. We are winning in the U.S. And then that kind of then leads to the question of why are we doing so well in the United States of America? And the main reason is we built software infrastructure that allows enterprises, both commercial and government, to move beyond chat, move beyond self-pleasuring, to actually produce things that are valuable. And whether this is tasking satellites in the commercial context or changing margins or changing American workers into Japanese engineers using our software platform and large language models, I believe we are the only company in America, the only really relevant market that will allow you to do useful things with large language models. And that is what's generating 68% growth in U.S. Comm, again, with a nascent sales force, doing it in a way that is not kind of playbook specific, thin technology, it barely works, and you have a sales force, but with 10 years of IP that presupposed LLMs before LLMs existed. You see the same thing in the government. Shyam and others will talk about it, but our mission footprint, whether it's in Ukraine, Israel, or in the United States government, is stunning. There is basically no conflict in the world that is not that where Western allies are involved and the battlefield's involved and the stakes are life and death, where Palantir is not the first call. And our ability to do this going forward is going to be even stronger because of past investments, and also the unity of our culture and the strength of our leadership, and in general, 20 years of understanding how to do this. It is true that it is mystifying to people, including analysts, how could this possibly be working? But it is working. And this is the sixth quarter of profitability, I dare remind people that there was a time when no one thought we'd be profitable, when no one thought we could crack commercial, where revenue per person was called into question. That also grew roughly 26% year on year. Revenue per person generated at Palantir. We do have headwinds in Europe. 16% of our business in Europe. Europe is gliding towards 0% GDP growth over the next couple of years. That is a problem for us. There is no easy remedy for that. It is also the case, though, that U.S. Comm surpassed U.S. European commercial, and we see that as favorable. I, in general, think this is just Palantir's time. Now, there are lots of questions about why we are so active in defending the values of the West. Our belief that the West is a superior way to live, and our ways of organizing around that are the reason why our products are transformative, the reason why we have the best people in the world, the reason why a Palantir degree, as it were, is much more valuable than an Ivy League degree. Before the Ivy Leagues even, embraced the thin, new, woke religion, otherwise viewed as an intellectual cause, but in fact is a way of organizing things so that the greatest institutions of our time disappear and turn into discriminatory dysfunction. Palantir is a counterexample, and I'm super proud of the results. We are going to continue to execute, especially in the U.S., and I'm very happy to have you on the call.
Thanks, Alex. We'll now turn to questions. We received a few questions from our shareholders about AI and competitiveness. Matthew and Ryan ask, how does your AI strategy differ from your competitors?
Well, we're executing our strategy at an unrelenting pace here. If you go back to the launch of AIP, I discussed how we thought the models were going to commoditize, and that's really borne out. We see that underscored with Llama 3 70B being released now. But the real opportunity for us, as Alex made mention of, is that people are using LLMs incorrectly in the enterprise. And as far as I can tell, we're really the only company to figure it out how to help our customers get beyond chat, leveraging the investments that we've made in ontology, really harnessing this pattern of implementation where you're taking unstructured inputs and turning them into structured actions and outputs that drive economic value in the enterprise. Now, there's this thing that some companies have started saying where only 10% of my customers have data that's even AI ready to begin with. I think that's completely wrong. maybe they don't have something to sell in the present moment, so they're trying to sell the past. But if that was right, how is it that in a single day boot camp, we're able to add value on top of our customers' messy, extant data? Ultimately, software that works. And to the present moment, I'm focused on helping enable builders in the context of the enterprise. I made mention of the DoD hackathon, where a single user built an AIP logic function, surfaced in Gaia Assist, that took a targeting process down from 6 hours to 10 seconds. More generally, in commercial, with Build with AIP, we are releasing a slew of tutorials, quick starts, and reference implementations. They're going to help turn every customer, every user into a builder to unlock the potential of what they can harness on top of AIP. And that's the way ahead, and that's why we're still ahead.
And I would say, I don't believe we have competitors. So I don't believe in the U.S. commercial market we have competition. I don't believe in the U.S. government market we have competition. I think that's the reason Ukraine and Israel bought our product. We are differentiated because in order to actually make AI work, you need an ontology. No one has an ontology. To Shyam's point, you have a lot of people running around saying the data isn't ready. Of course it's not ready because they don't have Foundry. If you have Foundry and the ontology, it is ready. If you have Foundry, our ontology and Apollo, you can actually work at the edge. If you don't, you can't. And outside of America, we would still have to convince people of this. Inside of America, we're not really convincing people that we have the only thing that works. We're showing up, we're showing it working, and we're saying this is what it costs, and it's working really well. But I currently don't believe we have competition. We have a lot of people who are like the Palantir of Iowa or the Palantir of Harvard or the Palantir of Uruguay, but they're not Palantir. And it's going to take a long time to actually build what we have because you'd have to actually understand what is special about the software infrastructure of having the combination of Apollo, Foundry, and the ontology, and then you would have to build on top.
Sorry about that. I didn't mean to minimize or maximize it. I just wanted to say it looks like we're down about 6% in after hours, so not loving carp so far. We'll see what happens.
Top of it so that you can actually do these handoff functions with large language models. And luckily for us, there is not a consensus at the investor level, VC level, or among analysts that we have the only thing that works and that means there's just going to be very little investment in copying and doing what we do. And investment in what we do outside of America would be hard to do anyway because the ecosystem, a term I don't particularly like, to get this done is in America. So you would have to do this in Silicon Valley, and Silicon Valley is focused on, to Shyam's point, the wrong things.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thanks. So good, great quarter. My question is, can you just talk about what conversion looks like from boot camps and maybe just double click on a typical customer? What's now you have more and more data points. What's that showing you about conversion from a boot camp to actually signing a deal?
Yeah, absolutely. I can talk through that. So we announced boot camps, 2 quarters ago as a go-to-market motion, and we're seeing that play out as you see that in the results. So in 1 to 5 days with a boot camp, we're able to do what used to take 3 months. And we're seeing, as I talked about, we're seeing customers, shortly after boot camp sign 7-figure deals. And we're seeing, the ability to be able to show them what they can do on the platform with real data much more quickly, and then have that monetization conversation much sooner. And so then you see that in the result, 69% growth in customers in U.S. commercial. We closed 136 deals in Q1 this year compared to 70 deals in Q1 last year in U.S. commercial. That's a 94% year-over-year increase. And so we're seeing, it's still early in the process, and we're seeing the results from the boot camps and seeing that they're working in the monetization from them.
The boot camps also have, quite frankly, another massive advantage because de facto it sets a standard that will be very hard for any other company to meet. So even if you don't buy our product, you de facto have locked in an idea of what's possible. And that means that at some point when you go try your own thing and it fails, you've seen, okay, well, I've seen the art of the possible, and therefore I'm going to go buy it from Palantir at some point in the future. The boot camp motion is an early motion, and I don't think we would say we've cracked the sales motion. In fact, I think our 68% or 94% growth on deals or 69% on customer. You have to look at this as we are at the way early days of figuring out how to actually get customers to buy our product. We are good at educating customers on what is the art of the possible, and then some portion of those customers buy it. So I expect as we get better and better at that, our numbers will increase. But it is really early days. We're not flawlessly executing on our sales motion. And I would say I saw this when we built our anti-terror platform. One of the most important things we did is go out and educate the world about how you could fight terror and maintain civil liberties. And most people we actually offered our platform to did not buy the product year one, but by year 5, they'd all bought it. And they bought it because they're like, okay, well, we see how you could integrate data across disparate data sets, maintain a security model, fight terrorism, and be in conformity with the law. And even if you say, oh, I'm going to go try to do this myself, in fact, you can't. And then that sales motion, so the relevant integral for this is not just what you close in quarter. It is kind of throwing a carpet on the whole market and saying, okay, well, this is the standard. If you can do better than this, buy it yourself, build it yourself, acquire it from other people. And if you can't, come back to us. We're here. And that worked very, very well. I mean, almost every country in the world, not every country, but almost every country in the world that could buy our core anti-terror product at some point did.
Thank you. Our next question is from Mariana with Bank.
I 100% agree with him. I think that this stuff. I was in this world where you buy a software to try and create efficiency and combine a bunch of silos of data and turn it into things that are actionable. And it's a fucking nightmare across all these products of all these companies, all the big guys. It's just none of it works. And if you can find, actionable, profitable, efficiency, and again, some of the biggest CEOs around are finding this, then and they just continue to refine this, their product's going to get better and better, and they're going to be able to sell the shit out of it, if nothing else, just from referrals of other people. So I think they're going to get better at selling it, and the products are going to get better at the same time. And somebody said that it's hard for 90% of CEOs and Wall Street analysts to understand Palantir's services because of the abstraction of it. And I would 100% agree with that, but they can't understand numbers, and I think they're going to get a lot better.
Of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. So it's also in the line of implementation, but less about the customer, because I think the demand you're seeing is unprecedented, and we can see that you're seeing that on both sides, like from the government side and the commercial side. What I'm really curious about is if you can give us some color around what is next in terms of actually tackling this demand and implementing the efforts and supporting a way larger customer base. What is hiring? What is partnerships? What is next there? And what is the most challenging from your point of view?
Well, I can certainly take that. Maybe Ryan will have some comments on the partnership side and the growth of that ecosystem. But on the product side, this is one of the reasons I'm most excited about Build with AIP and the boot camps that we're running after we have deals with customers. We're really igniting a movement within the customer in terms of unleashing their builders and tackling use cases. There's been a shift. Like, we still love to work on our customers' hardest problems and most important use cases to deliver crushing value very quickly. But concomitant with that is, how do we enable every single one of their builders to get going? And I can think of the most recent, say, 2 quarters, our ability to come in there, help them solve one problem, but ignite hundreds of use cases that they're able to do on their own. So really, even without needing additional partners, leveraging repeatable reference implementations, reference architectures, quick starts, tutorials that get them going. Again, and across different, we have these for all the industries that we're working in, for all the functions within these customers, and including in government itself.
And on the partnership front, you see, we announced our partnership with Oracle. We're seeing hyperscalers that are realizing that in order to drive compute, you need to move beyond chat, right? You need a solution that's taking organizations beyond their, for their AI strategy, beyond chat. We're seeing that happen there, and we're expanding, the partnerships across the space with partners implementing at our customers as well.
So we have across our company for the first time ongoing discussions with hyperscalers that are well known and with others, where we're basically saying, look, we have the ideal product, you have the ideal distribution, you can build on top of our product and then capture your distribution at a higher margin. We're having discussions like this in Japan across UHG, but we have our efforts to provide our core infrastructure to defense tech startups, which are going very well, simultaneously allow us to expand our core architecture, core software development into the DoD, but also make us less competitive with people, which helps us a lot. So a lot of what slows us down is people pretending they're competing with us. So finding ways to build partnerships with those people so they don't compete accelerates our revenue. And in US Comm, it's a lot of what Shyam is saying. It's We are allowing customers to do what we had to do in the past, which is supply Palantir software engineers. There are just not that many Palantirians, so we can't scale. We have to allow, encourage, and provide a platform where they can do it. And I would say what you see both on AIP and on Foundry is de facto customers using our product pretty much on their own. And that's, again, why that you see a revenue growth up to 26% compared to last year on per person revenue, because we're making more money with the same number of people, roughly. So, and that's precisely because of these things that we're doing. And so that has a lot of benefits for us, both alignment and quality of revenue. That's why you have this that's why we have 57 on the rule of 40. That's why our revenue is growing per person. That's why we can get away with sales that are not perfect. And we're thinking a lot about how to do that.
Thank you. Turning back to a question from our shareholders, a lot of people have noticed that Palantir is pretty outspoken when it comes to geopolitics. How has this been received?
Well, it's a complicated question because I think internally, I mean, there have been people who have disagreed. There have been people who have disagreed to the point where they've left. And this has gone on over the last 20 years. When we refused to walk away from Special Forces, the U.S. Army, when we took over Maven, when we refused to stop working with Homeland Security, when we had discussions about which countries we'd work with and which countries we wouldn't. More lately, in a more timely version, when we supported Ukraine, it was less controversial. When we sold Israel our software, that was arguably more controversial. The fact that I think the central risk to Palantir and America and the world is a regressive way of thinking that is corrupting and corroding our institutions, that calls itself progressive, but actually, and is called woke, but is actually a form of a thin pagan religion. That is a real danger to our society. And it is a real danger to Palantir if we don't discuss these things. The reason we have by far the best product offering in the world is because we have by far the best alignment around how to build software, what it means to build software, full alignment with our customers, a view that the Western way of living is superior and therefore it should be supported by the best products. People at this table have been in the trenches for over a decade each. Why do they stay? Why do they fight? Why do we come and do these calls? Why are we fighting for individual investors? Why do we actually care about revenue growth in quarter? I mean, honestly, everyone at this table has a lot of money. It's like we care and we fight for these things because we believe we are fighting for a stronger, better, less discriminatory, wealthier, more open, and better society by providing the friends of the West, U.S. industry, U.S. government, our allies, with by far superior products. And that's, by the way, and that's how we align with our customers. By the way, I have customers who disagree with me, but they sure as hell know I'm telling them the truth about what we believe. And probably more importantly, they know we're not sophists. They know we believe in things. And that's why we fight for this culture, and that's why we fight for our products. And that's why our products are growing. Again, you can repeat all these numbers over and over again. How do you get 68% growth in U.S. Comm with a 57 rule of 40? How do you nearly double your customer count, your deal count, your customer count, all these numbers? You do it by having full alignment and the best products in the world. Or you can do it by having weird things that barely work and trying to manipulate clients into buying your product until they realize it barely works because it's thin and of no value. And that's just not how we roll at Palantir. So it has been really, and by the way, on the last note, how do we have the best investors in the world, especially individual investors? Why do they stick with us when times were hard? Why do they fight for Palantir? Why do they, every time someone writes something inane, Palantir's gone MAGA, Palantir doesn't have a product, Palantir doesn't have margins. I'm sure this quarter, Palantir's growth is decelerating despite the fact we're obviously crushing it in America. Palantir is too crazy. Palantir will never be profitable. Palantir can't IPO. Palantir is too weird and odd to produce something that will be disruptive. We knew it was bullshit. The people who out on the front fighting against that BS, fighting against lazy, inept, discriminatory in the sense that is ignorance, people maligning Palantir, do it in great part because they believe that we are fighting for them, and we are. And we're fighting for ourselves.
God, every time I listen to this guy speak, I want to buy more of this stock. I don't think it's a terribly asymmetric bet right now, but I want to do it just to support him. He's so great.
And that's why we have such a great company. So thank you.
Thank you. That concludes Q&A for today's call.
All right, I guess we're done. That's it for Palantir. Moving off that subject. Again, like you said, maybe the growth decelerating narrative because of, Asia and really mostly Europe slowing down. But I mean, all of Europe is slowing down dramatically. and China slowing down. And so it makes sense that you'd maybe see some deceleration in some of these areas and still see us doing well here. I don't know. Again, the PE is pretty rich. I love this company. I love this man. I want to support what he's doing. My goal is to make a bunch of money on some of these other asymmetric bets and then funnel more money into this company because I love what they're doing. I love Anduril is another one I love. There's a few that are out there that are looking to help us militarily and help. The thing I love the most is that they're looking to create more efficiency in government, and our government sorely needs it. So it's just wonderful to feel like there's corporations out there like Tesla and Palantir and others that really want to make our country better. I love it. It's beautiful. Anyway, moving on. Let's start looking. I did all my stuff. Let's do your stuff, guys. Rishab Singh V, since we're done with earnings here, we're going to move on to what you guys' comments were before. Is Anduril publicly traded? No, but they've done like all the way to Series E. You can get some on there's secondary markets where you can buy, and somebody sent me a link earlier where you can buy basically privately held stock for some of these, kind of some liquidity markets that exist without it being on an exchange. So there's some places you can get things like Anduril, but again, it's not like a liquid market. So you kind of have to work out the details of, are you getting fair value? It's just like, it's a different world, right? But I love Anduril. If they go public, I'm definitely going to start supporting them. And I'm very happily going to support Palantir and Tesla well into the future. And I can't wait until I own just a shit ton of stock in both. All right. Anyway, Rashab said, "Hey, Jesse, welcome back. Could you please take a look at Chainlink? Thank you." Yes, I can, sir. Let's pull it up. Let me click this little button. Go over here. Gotta remember. Gotta really remember all my shortcuts so I can make this stuff quick. All right, Chainlink. Actually, looking underneath the 200 needs to break above, right? Otherwise, we're just kind of trading around in resistance. But the whole of the shitcoin market is looking pretty healthy as of late. And if we look at like, let's see, the crypto bubbles here. Let's look at the last week. They've done pretty good, all of it. Look at Render up 30%. So some of these are doing really good. We are seeing the crypto market open up. It looks like Link is lagging, but it's so hard. Like, I don't have anything fundamentally to show you on Link, right? It'd be like news-related events. That's pretty much it. Right now, finding resistance. This could turn into a head and shoulders, but I highly doubt it. With everything we've seen from the Fed and the Treasury, I would say that does not happen. And if anything, we've kind of established this base above the 50 moving average, and we're probably going to go higher. Disease Kodak, let's go. Everyone smash the like button. Yes, if you're still here, please smash the like button before you leave. It would be greatly appreciated. Is this members only chat? I'm going to say yes. Manny247, hey Jesse, I hope everything goes well for you and your family. Welcome back. Thank you. Eunice, hopefully I'm saying it right, joined as an alpha male member or female. Can't see the picture too well. Thank you either way. Intelligent Computing, Poet is up 11% so far today as of 7:20 Pacific time after testing the 200 SMA simple moving average on Friday. Awesome. That's great. That's the one though. Yeah, that's that. Yeah, I don't like that fucking one though. I don't like that one just because it has no real revenue and it's a very small cap. So cool that it's up. It could be up because of liquidity and a pump, but I just don't know if it's worth it. I got nothing fundamentally telling me that it is. Intelligent Computing, Rocket Lab earnings are post-market today as well. Looking at the weekly chart, it seems to have bottomed for a third time. You know what? Let's look at that one. That's interesting. Let's see what Rocket Labs is doing since they had earnings. I mean, I don't know what you can have for earnings for these guys, but let's take a look. So down 1.48%. And after hours, up 1.5 before hours, right? So let's see here. Let me do this. I'll see if I can pull them up over here and see if their earnings are loaded in yet. We'll see. I mean, they had a great revenue for Q1. That actually is good, 92 million. The problem with these guys is the burn. I mean, you make 92 and you lose like half that. for net income. So it just means you burn down your cash position. Now they're diluting stock. Their negative cash flow is like what, 52 million free cash flow and operating 42. So again, it's just the math. Being a rocket company sucks. And there's no vision on profitability for this company. So that's where I struggle with this kind of stuff, man. I just can't value this kind of thing. It looks like Palantir is still dropping. So it looks like we lost a lot of today's gains, pretty much. That's all that's happened there. Intelligent Computing, CLSK, and Mara earnings are in 2 to 3 days, respectively. I'll be doing both those. Both are up 10% so far today as of 9/10. Yep. We'll do earnings on both. I think FASB is going to treat Mara especially really well, but both of them really, because CleanSpark's a better run company. Who is Nick Young? Hey, Jesse, good to have you back. Thoughts on Celsius, CELH? Have they reported yet? I can't remember. No, not yet. When is their earnings? Let me see here. One sec, I'll save that. Let me go back over here. CELH, Celsius. Their earnings are really quick. May 7th. Tomorrow. Okay. Cool. They're up 3% today, 2% after hours. It looks bullish. It looks like it wants to break out. And this is a much loved stock, and let's see what they do on earnings. It looks like historically, at least going back to last time they had a bad earnings report was March 1st, 2023, so it's been over a year. So if they can do it again, if they can crush another earnings, maybe they do all right. They're not super cheap, but it's a good. The company's done well. They've grown a lot. Really good advertising too. I still have yet to try the drink. John Kleiss, how serious is Wells' notice in reference to Hood? It's bullshit. Also, I have a very personal situation that happened to my nephew. It was on national TV, if you ever want to talk. Yeah, maybe, man. Yeah, my nephew's had better days. So I'm just trying to keep him out of prison. And I think we're going to be able to. So won't go into all the details, but he's trying really hard, and I think we're going to get him on the right track. So that's my goal. And he didn't do anything too bad. Well, I mean, depends on the perspective of the person you're talking to. All right. Luke Automata. Hey, Jesse. I'm happy to see you back. I hope everything is okay with your family. It's good, man. Afternoon. Hope all is well. For stock pick, do you believe Hims has had a decent enough pullback for starter position? Actually, they had earnings today. I think they did all right. Let's look. From what I'm hearing, they did all right. Let's see. Up 10% after hours. Could be worse. Could be worse. Let's see what their earnings actually look like real quick. Let's cover that. I don't know. These guys recently had some pretty political moves. Pretty left-leaning. I don't know if that's going to be smart for them. We'll see. I think, I don't know. I probably wouldn't be buying into this myself today. Q1 looked good. Nice growth. Still 46% growth year over year, it's saying. Projections look good. Positive EPS estimates in the future. Positive net income of $11 million in Q1. Second quarter in a row of positive net income. Forward PE is 112. So some caution there. And again, and you have political statements. So I don't love this one for that. I think that, if we look back at Disney and just a whole bunch of, look at Bud Light, like a little Budweiser. You look at these other companies that have made political statements recently, and see how well their stocks have performed for the next year. I don't think it's great. All right, I'll get caught up with live chat in a second. I'm just getting caught up with the old stuff. Justin says, "Hey, Meta Jesse, please. Still thinking it's gets golden retracement on the 680 question mark. I'm waiting until it hits around there to take lots of my profit and comments. Thanks. It could run. They had a good quarter. There's nothing wrong with Meta as a company. I don't know. I don't know if it's good for humanity. Still trying to figure out this whole social media thing and what's good for humanity, but." They're a $1.2 trillion company, 27% year-over-year growth. Forward PE is 22. And Reality Labs bit them in the ass recently. Outside of that, the growth is good. I mean, their net income, they pulled in $12.3 billion. That's a lot of dollars. It's a lot of dollars. From a technical standpoint, though, on the chart, that's the actual question you had. Let's pull it up. It could. I mean, we had a clean bounce off the fib at 420. And I think there's a decent chance you could test 586. But again, I don't know. Again, the forward PE is only 2022 or 22.8. That seems cheap to me right now. I think this, yeah, I think so. I think we go to I'm just going to call it, I'll throw it out there. I think that we at the very least test 535, and 588 isn't much further beyond that. If you're going to take some profits, I mean, I think there's much greater exponential returns and other things in the years ahead. But 28% upside from here, if I'm right. And then, I mean, from 530, though, it's only 12%. So I don't know. I think there's better bets out there. If it got to the golden fib, though, I would take a breather. Why? I don't know. Maybe because it went down to the 88 range and will have went up 570% in a period of a year and a half. That seems like a good reason to not be too greedy. But again, the PE is cheap. So this is kind of one where this company could do well. If it did get up to here, though, like soon, the 700 range, I would definitely GTFO with the majority of my position. I made like 500% off of this, but I didn't hold it nearly long enough. I had calls. I wish I would have kept them. I sold them like over here, guys. So you could see I left a lot of money on the table for January 2025s. Regret it. So if anything, I'm too conservative with options. I know people might not believe that with me putting $350,000 plus in PayPal January 2025s that could expire worthless, but the asymmetric bet is great. That's why I did it. And now I'm rotating into 2026, and though 2025s still might pay out, but like, again, I'm pretty conservative, guys. I don't go for like balls to the walls in this stuff at all. Lisa Marie, glad you're back, Jesse. Hope all is going well with your family. Thank you, guys. You guys are all so wonderful. I don't deserve you. Eric S., let's go Palantards. Got a little Palantarded today, but I gotta say this, man. I'm more confident than ever about this company, and I hope it goes down. I'll take it. I do hope it drops. That's where my bias is. Gorgo, welcome back, brother. Thank you, guys. I was going through Jesse's withdrawals. I don't know what that means. All right, Almir. Welcome back, my guy. Glad you care for family first. I do, man. It's my health first because I need to be healthy if I'm going to help people, and then it's my family and friends, and then it's money and success and all those other things, and then you guys, obviously. And you guys are kind of like, I don't know, I consider you my friends, whether that's true or not. All right. RJ Cohen, welcome back. Gorgo, family is important, my friend. You guys are so great. All right, let me get past all these. I appreciate all you guys. Have I dumped PayPal yet? I already responded to that. I have not. I will not. I'm still holding for right or wrong, and I'll add to 2026 if I have to. Intelligent computing, love you, bro. Thanks, man. Appreciate it. C-list, only one share of Ethi. Yeah, I use it as a price thing. I think I only have one. Yeah, but I do have Ethereum and shit. I mean, I have Coinbase, and I don't know if I have any in here. Yeah, I got 13,000 in Ethereum here, but I've got more in another one. Probably have like 30,000 in Ethereum. So I mean, I own some. It's not my highest conviction bet right now. I think there's other stuff that could do really well. So I'm not too interested in it. Dave, thank you for the starter pack join, man. Polis Bro, hello everyone. Good to be a member finally. I am happy to have you here. JJ the Savage, Starbucks, how low resistance levels, etc. You know what? Let's look at it. I haven't paid too much attention to Starbucks. I wish I would have held my puts. God, you know, there's nothing wrong. There's nothing worse, I should say, than being really right on something and then just still not being in it for whatever reason, right? I totally called this. I said, hey guys, we're going to break down to this head and shoulders. The measured move is ugly as fuck. It could go into the 30s. Now, it doesn't have to happen with that soon, but boy, is it sold down. I was saying up here, like, this thing's going to sell, but I sold out too quickly because, again, we dropped 23% like in a heartbeat. That's locked in. How much further can it go? I don't know, man. It all depends on the macro environment. So it could go lower, but I need to adjust all these things because we're already so far down. If I still had puts in this, I mean, I'd be selling some and buying some of my favorite things because we're seeing so many good positive signs from a macro. Now, we could still get a little crush this quarter, but I was looking at my ultimate target. I mean, selling 70% of my puts, which I did not do because I did not stick with my playbook. But, somewhere down here on either this level, this green support zone that goes all the way back to 2015, or on peak volumes around the 50 range. But we might never get there too. If macro takes off for a while, we could go back up and then we could still be bearish, get back up into the 90s, and then we could completely fucking roll over in a year and a half. This thing doesn't really need to do anything for a while. So I don't know if I mean, let's put it this way. If we do really, really good, now that I know my thesis is good on my China play because it's playing out fucking perfectly, they have 7,100 locations in China, guys. They're still expanding, which is fucking stupid. And they're doing this in other international markets, which is also fucking stupid because if China gets really weak, the fact that international markets could continue to weaken is pretty strong. And the U.S. market might be the strongest one they have. If me, Kevin, is shorting Starbucks, then it's time to buy. Oh, yeah, if he started shorting, then I would go ahead and maybe purchase or just stay the fuck out. But, yeah, I don't know why. He's turned into more of a day trader. He confuses me a lot. Don't get me wrong. I mean, I shift around too. I'm probably being a hypocrite with some of this. But I don't know. Like, again, this play for me, if we do really good and the macro takes off and this thing gets back into the 90s, I will get some 2026 puts for Starbucks. And I will start to load the boat with that shit because I think that that's going to be a really good. I know the macro thesis plays out. I know these guys probably have 10,000 stores overseas that they shouldn't have that are getting competition from people that are getting much stingier with their money. And they can go to Luckin Coffee or any other number of fucking places like in China or other parts of the world without paying, well, they don't pay $5 to $6 there. They pay a lot less and the margins are smaller. But again, it's still expensive to fucking them. And if you've lost your job or if you've been suspended, I got to show you guys some of these videos with China. If you've been suspended I shouldn't say suspended, but if you've been given an involuntary vacation from your job for 11 fucking months, then you're going to try and figure out how you can even live and feed your family. You're not going to be focused on, expensive coffees. So now that thesis I know is real, if Starbucks does bounce and does really well, I will be using that short again in the future. I will get back into it, and I'll do it probably for 2026. I think 2026 is when we get fucked. Everything from a macro standpoint, global liquidity, Michael Howell, I'll show you guys some of those charts again, says that 2026 is when we get fucked. And that's also 2025 is when the Bitcoin cycle ends, usually Q3, Q4. So global liquidity looks like it wants to end in 2025 too, guys. So... And we'll be deep into another election unless Trump gets elected and cuts back on corporate taxes and a lot of things go right. I don't know. It's gonna get pretty ugly. I think it could. It doesn't have to, but again, I want to hedge for that, right? 10% of my portfolio in a Starbucks or a couple of plays at the peak of the cycle. If let's say I get my $15 to $20 million, I want to be at. Then I definitely want to have a good hedge, right? Putting $1.5 million in a hedge and then leaving $10 million to ride, probably not a bad idea. Or ride in other things, I should say. I'll be pretty fucking far out of Bitcoin in 2026, late 2025. And again, looking for market weakness and looking for things that could be a potential hedge. Who knows? Maybe I'll be telling you to buy gold or buy bonds. Probably not 20-year ones. Anyway, long rant for that. Let's keep going. The bottom of your screen heat map seems to be cut off. Yeah, okay. Yep, saw that earlier. Thank you. All right, Palantir earnings were pro-baked in today's increase. Yeah, again, it was kind of a sell the news event. Kind of makes sense. But they're a great company. They're such a great company. Mr. Castellano, been out of pocket for a week, which is good and bad. Missed your recaps. Hey, I was gone for a couple days, so I didn't miss those. Your darling Fubo posted some decent numbers. Can you take a look at the TA at the bottom? Yeah, I can look at it. I mean, I'm probably still going to shit on it, but I'll look at it for you, and then I'll shit on it. How's that? Fubo. Let's look at some Fubo. Fubo just sounds like stay the fuck away, doesn't it? Doesn't it? Somebody join. We got a member. Thank you. Remember to like if you could, guys. Now, you can make an argument that maybe we're starting to find support. We've got peak volumes over here. We're oversold on the weekly time frame pretty much and starting to curl up. There's some technical arguments here on why things might be okay. Excuse me. Now, let's look at the fundamentals of this company. And then I can shit on it. Maybe. Revenue growth, 24% year over year. Not horrible. What wouldn't I like about this? I don't know. The fact that they made $402 million in revenue and they lost $56 million. Or the fact that there's like Pluto TV and YouTube TV and Fubo TV and Direct TV and blah, blah, blah TV. And Amazon, I think with Amazon, I get free live TV now, which covers like a ton of stations. Thank you, Jae Min Kim, for joining and being a starter pack member. I very much appreciate it. But yeah, so there's so much fucking competition against these guys. And YouTube could literally just one day decide that they want to squash them like a fucking gnat. And the company would be destroyed, along with all of their competitors. So, I don't know, there's that. And I know that they've got a strong sports package. I hear that all the time from people. But when you have negative free cash flow, your debts are increasing, your cash is burning away, you're still diluting stock. And I don't care, right? And then I can almost argue that unless Q4 really kicks ass again, we're seeing kind of a slower growth rate here. It looked better here, right? This was good. These big jumps were good in Q4. Hopefully we get that jump again, but it's starting to round, and so we're seeing slower growth. And at the same time, we know the competition could just smash them. And I've used the product. I use Fubo TV and YouTube TV. I actually found them to be very comparable to each other. And I like YouTube TV better because I can use it on mobile and actually have like the picture-in-picture. And I can't do that on Fubo. So I ended up canceling Fubo and I'm sticking with YouTube TV because I think it's just as good, if not better. I wanted to like it. How is Fubo making the world a better place? Yeah, I mean, they're like a competitor against a bunch of competitors, and they aren't really. So, again, this is one where I was hoping it was a good asymmetric bet back in the day when I did own options for this company. But it just looks like a really good deal because they got so fucked. Royally fucked. Because this thing went live in 2015, I don't even know if it was the same company. And comparably here, it was $20,000 a share to the $1.39 that it's trading at in after hours tonight. So it looks like it's a good deal. And even if you go to the way back, or the not so way back in the 2020s, this thing was trading at $60 a share, and now it's $1.40. And so it's lost 95% of its value. This is the definition of a value trap to me. I would stay the fuck away from it. That's pretty much the response you're going to keep getting from me. So you can ask, but I'll keep saying this every fucking time. Unless something changes, and I don't see it, and it's not making the world a better place. So, it just loses all the check marks, really. All of them. Lisa Marie, Intelligent Computing, I'm rooting for all of us that want more shares less than $20 to support this company and make more money. Yeah, me too, for Palantir, if that's what you're talking about. It's a great company. Lisa Marie, Palantir cost basis is 911. Go figure. That's nice. Intelligent Computing, how is Fubo? Yep, all right. And then how is Fubo and blah, blah, blah card? I can't quite see that. Bingo card. Is Fubo on the bingo card? It shouldn't. No, I don't talk about it enough. I think that would be have to be a bonus square to be on the bingo card. Anyway. Paulo Spro, indeed, waiting for Ross Gerber to short term too, as I know it's bottomed. Oh, Tesla, it's already topped. It's already bottomed. Fubo uses AWS servers. Cool. Is that like a diss? I don't know, man. You might have to fill in the gaps. Lisa Marie, Meet Kevin is way too emotional, and I pity the people that are following him. I do too. I mean, he can be right about some things too, but he's too emotional. I get emotional, but I think it's in a positive way, if that makes any sense. Like I don't just lose my shit and immediately decide that a company isn't good anymore and that all the actual facts don't matter. I think that's more my style. Hopefully that's good, right? All right, intelligent computing and me, Kevin, shorting. Yeah, okay. And Lisa Marie, amen to that. And I'm not religious. Polos bro. Indeed, waiting for Oscar. Okay, that's that one. Oh, and I just got caught up. RJ Cohen, ZM. So we're talking about Zoom, right? I think we established that these guys are not actually in China. I think they're partially incorporated in maybe some other place like Singapore. I don't know. Could data be getting back to Zoom? I don't know. I never use this product anymore. I know it's beat to fuck. I mean, if you look down here at the chart, it's crazy, right? Like, look at how long. This is a bottoming pattern for sure. And I don't know if it just gets pain from, it's literally had a 0% today at close and then 0% post market and some of the lowest volumes it's had in forever. It's kind of like crazy low. What is this on the daily? It could be a value trap. Yes, you're right. It could be. The volumes, though, are plummeting on this. There are some technicals that say that it could be going up, but here's the problem I have with it. 19.25 billion. Let's just look here at the financials, okay? Is it overvalued? Is it undervalued? Now, one could argue a forward PE of 12 is great. I cannot fight that whatsoever. Now, let's see where they're incorporated. San Jose, California now. Okay, that's good. American company, America. I mean, I think they're partially in China, but whatever. Like America. And so 12 PE is actually brilliant. Here's the problem, though. There's no growth on it, right? So it's kind of weird. At the same time, all the revenue flushed in during the pandemic, and then it's slowed ever since. Let's see what the estimates are. The estimates are a little bit, you could argue maybe a little bit extra growth. Maybe we're growing by 1%. EPS is looking a little bit better here in the future. What's the positive? 298 million. That's not horrible. Again, the PE isn't bad. I think what's the vision of this company and what are they doing? I love the fact that they have $5.4 billion in bonds. That can help them with their cash balance sheet, like going forward, right? If they're getting 4 or 5% off of this stuff, that can help for a while. And again, $7 billion total between cash and bonds, only $48 million in debt. That's beautiful, but they're still diluting shareholders, and positive cash flow is good, 300 and something million. I mean, these are not bad numbers at all. Technically, this thing could flip. This might be an opportunity. If I was going to touch Zoom, though, it would have to be options. It would have to be options. I would do nothing else. And I'm actually going to put this on my radar with the others that I've not done official review on, because I do need to do another members only video. It'll probably happen after earnings. Maybe in the next couple of weeks here, I'll get another one out. And again, this will be the month that I end up lowering the fee too on people that are doing the starter packs and all that stuff. It's going to drop to $1.99, so you guys will get it cheaper. Because I want you guys to stick around, and I want to make sure you see the value. I'm trying to pull a Palantir here. I want you to understand how fucking great I am at this, or at least how hard I work at it, and how I can provide value to you, so that I can do that. And I don't need to make a bunch of money off you to prove that. So there you go. But yeah, so Zoom, this might be a good one, man. I'm going to look at options on this one. I've got a few to look at. APLD, TFII, STEM, NVO, CSIQ, OUST, NLTH, U. There's just a bunch of these. I've got about 10 that I want to go through fully. Also, if you guys aren't seeing this in the bottom left, still getting smoked. Again, all the gains from today are gone on Palantir. So up 8.06 on the day, down 7.97%. Basically a wash for the day, okay? So not a lot happened in Palantir today. But I am interested in Zoom. It could be a value trap, but if it's got a nice asymmetric options play here, could be interesting. And I just need to see more about the roadmap. Maybe I need to listen to an earnings call, understand if they've got any real vision on how to grow. Because it's growth that matters, right? Are they going to grow at all? Or are they just going to meander off and die because there's other companies that are willing to do this for free? I know Microsoft is having to kind of break some stuff off with their CRM type product, right? So maybe that gets better. Hey, Nick, thank you for the 5 memberships. If you guys want them, click on them. It'll give you a free one for a month, and you can chat with me and ask about stocks. All right, so I'm going to jump down here. Antonio Garcia, Jesse, I asked about TWOU. Yeah, that's actually one of them on my list, right? I think. Maybe it isn't. Is that Twilio? Let's look it up. Anyway, a few weeks back, the company is just losing money. You asked for any info, but I did not respond in time. Only thing I have is that it seems ARK K owns it. Yeah, I think I'm better. So I use ARK for the genomics fund, but I think I do a better job with the technical, like technology funds, right? So I don't love them from that choice. I think I'm better. And again, I love their research. I love their research. They're great. And then Tasha, her glasses have gotten so big. It's very entertaining. Anyway, I like the nerdy chicks with the glasses. They're my jam. Nerdy, smart chicks that love tech and Tesla. Anyway, that's more information than you guys need. So, yeah, TU Inc. I don't like the debt levels here. So, what is this? TU Inc. TWOU. Burned 54 million, only made 198. Negative growth year over year of 17%. Not a lot of cash, diluting stock consistently. 15.6% short interest. It's an education and training services company. If we look at the yearly here, their revenue just stopped in 2021 and now it's going down. And their losses look like they're getting worse. Their operating expenses are not under control. They're getting better, but it's not great. And we look here at estimates. It maybe revenue's getting better. Maybe we're getting into positive EPS in the future. They are buying back their stock as of recent in 2023. And there's some people there that believe in it, man. I mean, that's a positive sign. Look at 2019, 2020, 2021, 2022, 2023, 2024. I like to see that this company, if there's any positive in this fucking company right now, it is the fact that they're buying their stock. There's any hope I have for them, it's that the insiders believe in this fucking company. So much so that they're buying 1 million shares in 1 year of this company, instead of heavy sell volumes. So that, if there's anything that gets me positive about this company without knowing a lot about it, I like the fact that their stock-based comp has dropped a lot. It's only 1.45% of revenue right now. But then at the same time, they believe enough in their company where they're buying shit tons of the stock. What do they have for actual insider ownership? Isn't huge. It's about 5%. So they're not fully in the company, right? This is not a huge number, but it's pretty good. Not a huge number. ARK is their biggest investor. BlackRock second. I don't know, man. I just have to know so much more about this company to really be able to say if this is a good deal. The thing I like though, if they can just go positive, the numbers, if they can flip net income around here and get positive, the revenue isn't bad for as tiny as this fucking market cap is. That can't be real. That can't be real. Is that what the market cap is? What the fuck? Let me just see this real quick. This might actually, I don't know. I might have to actually end up learning more about this company. Damn you people. You give me all this fucking homework. I hated homework. All right, let me look here. Holy shit, it really is $28 million. Holy shit. All right. I'm going to have to, you guys are going to make me do a fucking members only video before. I just need to have more things going up. If you guys are making a bunch of money off of PayPal, SoFi, crypto shit, Tesla, then I can give you another video. I got to make sure you have cash, right? I got to make sure that you can actually benefit from it. But there's a lot of, this is interesting. The insider trading in this is interesting. And the fact it's only a $28 million company right now is interesting. Again, they got a decent amount of debt. I can't say a lot of debt. It's less than $1 billion. But this is both scary and enticing. So I'm going to do more research. I got to understand why they're buying so much of their stock. All right, Lisa Marie, let's see here. I know you didn't see this the last 2 times I asked. Did you say in video that DLO was doing well and then crushed. I don't remember. I don't remember from the video. I don't think it's. I mean, I don't know why I would have said that it was crushed. Let's just look here. Let's look at DLO's financials. DLO, from a financial standpoint, I think looks great. And they're Latin American based, and New and Mercado Libre and all these other Latin American companies are doing really great. The growth rate is 60% almost year over year for revenue growth. Profits are 53%. You did say it crushed in 20. Oh, is that what the context is? Let's look. Let's go by yearly. So, I mean, the only thing I can really say is that they've seen a massive amount of growth since 2020, since the pandemic. Like, it's a massive amount. The 104 million and then to 650 million more recently here in just a course of a few years is huge. And what's the PE? Like 17. That's not crazy. This is a Amazon type company ish, right? And revenues are looking good. EPS looks good. EBIT looks good. I don't think there's any buybacks or anything. And this isn't right for Q1, so we're going to ignore it. So we can see institutional ownership going up. Short interest is not crazy. It's only 5% on this company. And let's see what other metrics. Revenue by country. Look at this. Look at the growth they're having. Still growing in Brazil, but then they're expanding in Mexico. Saw a lot in Nigeria. Nigeria looks like it could be seasonal or a little weird. I don't know what's going on with that economy, but again, like, oh, and what is this? Africa? Oh, I didn't even realize they're in Africa too, and Latin America, Argentina, Chile. God, I'm liking this company even more now. These are just going to be such high growth areas in the decades ahead. I don't know about years, but look at the operating leverage in this company. There's a reason I love this fucking company, guys. I think it's overlooked. And that's why I have options in it. And that I might pick up more if Tesla continues to crush it, or let's say crypto really starts to take off again and we get like that 50% move where I double my money really quickly. If I make 1.2, 1.3 off of crypto in a short period, million in a short period of time in like the next couple of months, I mean, and DLO don't pop, I'm getting more shit. I'm getting more options in this motherfucker, man. I think I'm in 2026, right? Like, what am I? DLO. Yeah, January 16th, 2026, $35. They're down 24% since I bought them, down 5% today. The stock was down 1.47%. And I mean, I'm excited about this company. I think they're going to crush it. And I don't know why they're getting beat up so much, but I do think that they have the ability to go up a lot. Maybe it's because the net income, again, dropped over the last few quarters. But as you'll see over here, operating expenses, R&D is still kind of strong. G&A could drop. It's kind of flat there, but a lot of it seems to be going into R&D as of late, and I'm okay with that. I'm okay with it. And they were buying back their stock recently here. Again, they're expanding so much. I'm very excited about the earnings call for these guys. When is it? Let me see. What's the earnings? Oh, you know what? I guess I could just go back here. The earnings is May 14th, so we've got a little over a week on this one. I'm very excited to see what happens with it, guys. TU2 is an education contracting company. Okay. Lisa Marie just wondered what happened in 2021 when everything else was going crazy. Maybe because they're not in the U.S. Yeah, that's possible. It's actually totally that, because I can tell you that because New Mercado Libre, all these others, Latin America is exploding. China's shipping all their fucking shit to Mexico to try and basically circumvent U.S. tariffs. So Mexico is going to fucking explode. Brazil is kind of like a pseudo-communist government. There's issues there, but they're seeing a lot of influx from China with money too, trying to benefit them. And then Argentina is getting ready to, I think, explode because they're going to be, you got to remember 100 years ago, people thought Argentina would surpass the United States and be the greatest country in the world. The only thing that fucked them was some weird pseudo-communist socialism bullshit, and that's gone. So I would expect Argentina to explode. There's a reason Elon Musk is talking to Javier Milei. I just expect this company is exciting to me, guys. And again, I'm gonna increase my allocation to them. I just need to figure out the timing, but might be really soon. But since my calls are already down 24%, because what are they? $35 price target is what we're looking for. And I'm sorry I'm spending so much time on this one, but this is one of my members only videos, and I love this company. And I still think that they're going to do really, really well. The PE is stupid low. It's like almost single digits. And we're down 0.41% after hours, down 1.4% on the day, down 81% almost from its all-time high. And I think we find support around these levels. So it makes me want to get in soon. And again, like, I just think this company is stupid cheap with a market cap of 4.1 billion when you look at look at just like these numbers. Again, PE 16.98, not exactly single digits. That's an exaggeration, but PE 27.5, and then you look at net income, I guess 40 million. Probably going to be somewhere around there. Probably around 50 million here soon. But these aren't horrible numbers for a $4.2 billion company. And the growth rate, if it continues, especially like I think we're going to see growth in parts of Africa that they're in, Argentina, all of Latin America. I'm excited about this. If there's any asymmetric bet I'm willing to pick up, it's a company, it's growth in Latin America with a company that has seen 60% year-over-year growth. That seems like a nice asymmetric bet, and that's why I picked it. All right. I think, what time is it right now? No, almost 4:30. I'll stick around a little bit longer. Let me see here. Let me make sure I didn't miss a bunch here. I'm trying not to skip anybody. All right. We did Zoom. Fubo, we did. Andrea said, super work here, Jesse, on X. What do you think of cake? Let's go back to cake. I don't remember what cake was. I remember seeing cake, but I don't remember what it was. Oh, Cheesecake Factory. Yeah. Okay. I don't think much of this one. It's got like an 11 PE. It's got a 16.81 PE ratio. It's like restaurant industry is tough, man. If there's a recession, they're fucked. If there isn't a recession, they do okay. But either way, it's not an asymmetric bet. Their year-over-year revenue growth was negative 2%. Their estimates are just like okay. I just think that there's better businesses to be in. That's me. Belay's the GOAT. Fuck yeah, he is. Jeremy likes cake. Jeremy, financial education, Jeremy? I mean, this is fucking boring to me, but he likes some weird shit sometimes. I love the guy, actually. But, I mean, I wouldn't go all of his picks. He sometimes picks some real losers. But I love listening to Jeremy. I think he's very insightful. The dude used to work at a fucking Kinko's, man, and now he's a multimillionaire with a nice fucking house, driving a bunch of Teslas around. You can't diss the guy too much. I don't like all the coarse shit. That's just, I don't like that stuff. I'm more of a like James from Invest Answers. I like that approach more than like, here's a course for this, and here's like all the stuff. And James is just like, hey, I got a Patreon. You can pay for it. I give you a bunch of fucking alpha. I also give like 99% of my alpha for free. I like that kind of approach. Even though Jeremy's not too bad. There's way worse people than Jeremy. There's me, Kevin. Way worse. Way worse. And I like Kevin. I just think he's turning into something I don't want to fucking look at. Antonio, Jesse asked about it. Okay, that was that one. All right, now I'm caught up. Let me go back down. 90% down in a year. Twilio is a CRM automation tool that interfaces with customer systems. I used it once with a client. I used to use Twilio as my last company. We can pull it up. Here's the deal. I think Palantir is like probably going to replace a lot of these CRM type systems. Where you're trying to like figure out project workflows and communicating and storing of data and groups and like all the Microsoft Teams bullshit. I don't know. That's why, again, like with Zoom, I don't know, like, is Teams going to go away and then it makes it easier for Zoom to compete? And do they have a good revenue stream? I don't know. With Twilio, I struggle with that same shit too. They lose a lot of money. They're good at losing money. They lost $365 million in Q4 of 2023. That's a horrible fucking number. They had $1 billion in revenue, a little over $1 billion, and they lost $365 million. And so they have cash still, and they're not diluting shares as much. Lots of cash on these guys, and they've got a lot of bonds too, so that could help them with their burn. and revenue's going up, but it's just like the parabolic growth phase really feels over with Twilio. And then I just look at companies, and again, they never made money. Lost $1.256 billion in 2022. I guess they lost less, only $1 billion in 2023. But there's just nothing screaming extreme profitability here anytime soon. And they look like they were maybe getting there, but then they just fucked themselves in Q4, which just takes away all this positive growth for the last like 5-6 quarters. So I don't love this company. 23 PE arguably is okay. Maybe fairly valued. But I just worry about companies like Palantir eating these guys and every other fucking company that specializes in efficiency and AI and customer management relationship, blah, blah, blah. I know, because I lived in that world and I fucking hated it. It was just a trash world. Our products were all shit. All of our competitors were shit. It was just like, which one of these shitty products is this company going to choose and waste a bunch of money and time on before they quit and try and find another one? That's what most of the software as a service, like customer relationship, data, silo-ish type stuff was. I think Palantir is like one of the first real companies that's coming along. Jesse, can you please take a look at 4, please? Yes, I can. I certainly can. Let's look at them from the financial. This is Shift 4 payments. Revenue growth, not bad. Year over year, 31%. Can't hate it. There's some crazy shit forecast. Is that right? Is that right? Or is this just fucked? Alejandro, if you're on here, can you please look at this? Tell me if this is right. I could look at other stuff too, but I'm lazy. So let me know. But here's what I don't like. More recently here, you can see how they're selling shares. They're not buying. So insiders don't look great. Again, ignore Q1. Institutional ownership hasn't changed too much. 10% short interest. Estimates look weird. Stock-based comp is a low percent, like nothing crazy. Operating expenses they're not bringing them down, and their debt is becoming high, and their cash is going away, and they're diluting. And they made $13 million in revenue last quarter. I don't know, man. It doesn't look great. Forward PE of 16 isn't horrible. So, I mean, the valuation isn't nuts. If they can point this in the right direction, I just don't like the cash burn, the share dilution. And if this is right for these estimates, it could get weird. Maybe it's not right. I like the forward PE right now. We'll see what the quarter brings. When are earnings for these guys? Let's look at them from a TA standpoint and see how quickly earnings are coming up. Oh, don't type the word earnings. Type in 4. All right. So this is below the fib. Had a strong bounce from 2023. Definitely bottom of the RSI channel. That's kind of a positive. And earnings are coming up pretty quick. May 9th. Real quick. 3 days. Maybe we'll glance over this. I think there's other earnings at the time, but maybe we can just look at it. All right, guys. I think I've been running an hour and a half. I am pretty busy as of late. Hopefully I jam-packed in a bunch of shit for you today. And gave you some value. Again, I think Palantir had a great earnings. They're running at a PE of 75, which is high. And I like, just to recap, I like the macro right now. Global liquidity, I think, is starting to pick up. Maybe it takes another week or two, but I actually think that the sell in May and go away thing is going to be bullshit. Voting time tells us that right now, summer months and the Bitcoin halving tells us that the summer months are going to be some of the most exponential. So I love markets. All the data I'm looking at tells me that we're probably going to melt up before we melt down. That's the view I have right now of the world. Bitcoin's a great fucking asset. Tesla's a wonderful company. Palantir should be something you buy the dip on. I hope it drops a bunch more, and my asymmetric bets on Tesla and PayPal and SoFi and Bitcoin-related investments start to really pick up for you guys, and ARKG and some of these others, so that you guys could buy dips in things like DLO and Palantir and other companies that are doing wonderful shit. So let's have some fun. Let's figure out how to support great companies that are changing the world. Oh, went too quickly there. And hitting all the wrong buttons right now. Let's just go back to me again. Hitting all the wrong buttons. I'll try and close it right. But anyway, I love you guys. You take it easy. I'll be back tomorrow. We're doing another earnings call. What's tomorrow? Let's look here. Let's look. Tomorrow, there's a bunch of stuff, I think, for earnings too. But, oh, no, that was today. So I'm going to do Cypher mining tomorrow. That's probably going to be my main one. I don't think there's anything else. There's a bunch on Wednesday. It's got to be the hood. And then CleanSpark, got to be Thursday. I'll probably listen to the Flux call, and then I'll listen to Riot and Mara too later. But I'm doing CleanSpark on Thursday, just so you guys know. 4 miners on Thursday alone. I only care about CleanSpark. I'll probably watch Mara. Like I said, I'll watch Mara, Riot, and maybe Flux separately. And maybe I get to cheat on Flux because I'm imagining my friend Rex is going to be covering that. So I'll probably just fucking cheat and watch him on that one and just update you guys with my thoughts on it. Or you can watch him. Again, next week, Bitfarms, TerraWolf, DLO, D-Local, New. We'll let Tanner do New. I'll do D-Local. I'll do HUD 8 just because if nothing else, just to get Sue mad at me. Even though I love Sue, she's a sweetie. But anyway, that's it. And then we can start to die down from earnings, and I can focus on members only videos for you guys. But thank you to the 264 that are still here at the end. I appreciate you guys. You have a good night, and I'll talk to you later. Peace. I'm just gonna pump this again. Forgot how